Top of the morning, traders, and happy Tuesday, January 27th, and welcome to the most value pack live trading show, where we live trade, break down charts, cover high impact events, and talk trader mindset. Hopefully, everyone had a great day yesterday and is ready to kick off another opportunity-filled day. If you did miss yesterday's episode, go back and watch yesterday's episode if you're just jumping in for the first time. Do me a favor, smash the like button, make sure you're subscribed. The market is about to open up. We're looking to gap up here, so keep a close eye on that PMH, that PML, all the technical levels you usually pay attention to. But before you do that, decide how many trades you're looking to take, review your setups, keep your rules at the top of your mind, and look to take advantage of the best opportunities. What happened yesterday stays in yesterday. What happens today stays in today. Let's be present and look to take advantage of the best opportunities. So let's get the show started. Good morning, good morning, good morning. We're officially open. SPY is open. SPY officially open. The Q's pushing to the downside. Where did my Dow go? Where did the Dow go? Okay, Dow pushing to the downside. Where does IWM? IWM pushing as well. IWM stable. Nice gap up. Nice gap up. We're above that daily upside breaker. We're within striking distance of ATH. I was trading gold yesterday, so let me change this to. Okay, SPY. All right, we're opening up. Okay. In the middle of nowhere, we're still within that PML. PML is 693.95. 693.95. 693.95 is PML. 693.95 is PML. 693.95. Good morning, good morning, good morning. Good morning, good morning, good morning. Thumbs up on the chat on YouTube. Let me know how the audio is. Let me know how the audio is. We got that PML. We got that PMH up here. Might have to, if it's a mic problem, we'll just get a new mic. We'll take a couple days to replace this mic. Audio should be good on Google Meets. Gap, thank you for the gap update. Elian, as always, 5-minute orb army. You're on the clock in a couple of minutes. So assess the situation. We're currently trading at that PML. We're trading slightly above that daily upside breaker. We're starting to see the Qs take off. We're starting to see the Dow pull back. We're starting to see the IWM fall off a cliff. So that rotation that we're discussing is somewhat taking place so far in the first few minutes. But again, the first few minutes don't make up the entire day. So very important for us to continue to pay attention. We do have this critical zone between that daily upside breaker and that pre-market low that I'll pay attention to. We're entering the jaws of the gap up. We're entering the jaws of the gap up here. So let's mark out that TOG. We do have another zone here as well. That runway does look appealing. Between that 694.25 into 695. But keep in mind, right, we are in the jaws. We are rejecting off of that rejection zone. We did come into that rejection zone rejected initially. So if we can come back into those highs, into PMH, this might be a nice rejection zone. Grab it, come back below it. But that would be going against the tide if we do decide to do that. Let's draw that 50% retrace on that TOG BOG. We're starting to see IWM fall off a cliff. G50. Good morning, good morning, good morning, good morning. One trade, no quality, no rush, 100%. Let's get the likes up on YouTube, guys. Make sure to like the video. Let's get the likes up. We can get the likes up fairly quickly. As soon as you jump in, just hit like. All right, especially if you're enjoying the content. So now what I'm paying attention to is, of course, we open up at that PML. We open up at that PML. In pre-market, we got as high as 695.08. Yeah, 695.08. The Qs, right, they showed weakness, showed strength. Now they're showing weakness once again. Good morning, Mixon. Good morning, good morning, good morning. VIX continue to push. Keep in mind, 10 o'clock team, 10 o'clock. We do have a catalyst. 10 o'clock, we have, I believe, consumer sentiment. Let me double check. 10 o'clock, we do have a catalyst. Yep, consumer confidence. Consumer confidence at 10 o'clock. Richmond Manufacturer Index. These are orange folder catalyst. Okay, now the president was set to speak at 2 p.m. Now it's been moved to 4 p.m. Right? So that's been moved. 5 minute, or I mean 15 seconds left. 15 seconds left. In this case, SPY's candle is the only one that's showing signs of life. All the other candles are showing weakness, but if you take the orb on SPY, those are the highs. You're going to see that break. If you're taking that break, know where your entry is. If you're taking that retest, know where your entry is. If you're taking that hold, know where your entry is. So far, we did break above those highs, nothing much. And we're still trading below VWAP. Waves to kick things off are waving to the downside. Waves to kick things off are waving to the downside. Okay, 5 minute orb across the board. So one separation away from the zone. There's no separation. No separation. If I'm looking for a dip buy, possibly off that G50. Okay, Qs are below PML. IWM got below PML, but wicked aggressively. So SPY is basically stuck between a rock and a hard place here. Other side of the orb is 693.84. 693.84. I'll put on this chart here. In that case, what you're really pursuing is that G50. Okay? This is your runway. Your initial runway is here. Okay? Piece by piece. Everything continues to dump. I'm looking at the puts. I want that PML to hold into the jaws of that gap down. I want the zone to hold. Okay, IV still relatively muted. I'm looking at the 693s. See if we get a strong close below this box. Get some follow through from the Qs. Want a strong close below here, then I'll go short. Want that PML to fail. I like how the Qs are dumping. I like that 3 down on the 5 minute on SPY. Want it to go full body, go a little lower, hold below PML. Okay, I'll take the puts right there. When the puts right there. Okay, see if you continue to push lower. Using that PML as my guide. I like how the Qs continue to go. Let's go. Let's see if we can continue to push. Stay below that PML. I'll give it 10-15%. As long as the Qs don't start bouncing, I want to see a slide into this territory. Slip it slide into that territory. If it did take this manage accordingly, there we go. Did C5, go, go, go. Targeting double digits here. Stay below PML. Stay below PML. That 5 minute candle. If that 5 minute candle can close as an engulfing candle, that's going to be very favorable. Okay, so I need that strong close below it. So strong close below it. So in this case, the ones who take this are the orb break traders. Orb break traders will be in that up 5. See if you get some follow through here. Up 7, up 8. Okay, let's see if they continue to push. We're trading below POC. If you did take it at 8, that's a good cut. See if I can squeeze doubles here. Okay, up 10. Take majority off right there at 10. Down to runners. Okay, targeting 693.41. So now no close back above that orb. Go, go, go. Up 13. Go, go, go. Take some more off right there. Down to the last one here. I want this last one to stay below this box. Stay below that box. No close back above PML. No close back above PML. Okay, bulls are starting to wake up here. Okay, I'll close it right there. So stop that on that last one. So secured profit at 10.13. Let's stop that on that last one. So couldn't get all the way to this territory there. So quick little scalp, but we're seeing some of those names recover. All three of them are starting to recover. And we're still moving about 44 cents per 5-minute candle. So there's not one of those expansive days where we're moving like 50, or we're moving like $1, 90 cents, so on and so forth. So if you are taking those further dated contracts, you might have to start locking in at high single digits. Okay. Now we're approaching the other side. Okay, we're approaching the other side. Now VIX starting to pull back. We're coming back to VWAP. 694.07 is VWAP. 694.07 is VWAP. Beautiful job, up 2% on the portfolio. Great work. So in this case, if you scalp that breakdown from that PML, you can squeeze something out. If you took the orb, 5-minute orb breakdown to the downside, maybe you squeezed high single digits, low double digits. And now we're coming to the other side. Okay, now we're coming to the other side. So in this case, see if we can hold. All right, hold. This time, I want to see a hold, a clear hold. If I want to play the back and forth game, I want to see a clear hold. All right, no hold, more than likely than it folds. No hold, more than likely fold. Qs are testing that PML. Dow's testing that PML. IWM is starting to test that, wants to go test that PML as well. So SPY and the Dow are the only ones above PML. SPY and the Dow are the only ones above PML. SPY and the Dow are the only ones above PML. Okay, they might want to do the choppy dance, okay? They might want to chop it around for a bit. We do have FOMC tomorrow. All right, so today might not be a day you're on to overtrade. You want to really pick your spots wisely. We are seeing IW starting to bounce. Look out for that 263.86 rejection on IWM with price action combinations. The Dow's starting to catch a bid here. Nice rejection at that 628.56 on the Qs. So for SPY to take off, more than likely the Qs need to get above PML. For SPY to take off, getting above PML on the Qs will be favorable. So they dipped. We've seen this profile before, guys. They dip into PML. They dip into that jaws of the gap down. All right, I'll pull it up here in a second. Okay, they dip into the jaws, the gap down. After dipping into the jaws, the gap down, they want to take off. This took place, I believe, on Tuesday, like Tuesday of last week. All right, this same. We'll pull it up and check in just a minute here. 15-minute orb army, 1 minute away. So 15-minute orb army, the 15-minute orb army, your range is between 694.40 and 693.58. Okay, take this off here. So there's a lot of key levels in this territory. 1, 2, 3, 4. 4 key levels in this territory. Question is, can we break above these highs? Can we break above that high? We are at that daily upside breaker. No worries, Firefly. So you got all those levels. Thank you, Kevin, for sharing. Kevin just put the levels there, guys, in the Discord. Make sure to like the video on YouTube, guys. Let's get the likes up. Make sure to like the video. Let's get the likes up. If we get a nice break and hold, I like how the VIX is dumping here. I'll flip to the other side. I will flip to the other side. Want to see a nice convincing hold. I want the Qs to get above that PML, ideally. In this case, this is the runway. All right, so you can see when we shorted, the runway is down here. It didn't get all the way there. It was a few points shy, about a 17 cents shy of getting there. But it doesn't mean I'm trying to catch the whole thing. If I can get double digits out of it by that time, I already have something to show for it, okay? So we're just jammed here. Exercise that patience. No wave, no ripple yet for my orb army. Let's drop down to the 1 real quick. Okay. No ripple yet. I'm trying to make a ripple right here. Okay. Q is dumping. All right. We're above it now. See if I continue to push. Continue to push. Want to see that nice 5-minute candle hold. You might want to play some games today. Play some games today. Trappy. If they play the trap game, we know what to do. If they play the trap game, we'll be there for that game as well. We'll be there for that game as well. If this can flip bright green, that's showing some signs of life. That's a good sign. Okay, but the only issue is it needs to do it right now because this is a sell block grab. So if we want to counter this massive cohort of sellers here, we're going to have to accelerate past this territory. There's no ifs, ands, or buts. Okay. No ifs, ands, or buts. Okay, nice little retest. Okay, expanding. All right. See if you can pull in a little bit. So again, I'm trying to pursue this move. That's the runway. That's the window of opportunity. But trying to find a criteria that fulfills an entry. Right? Trying to find criteria that fulfills an entry. One minute left on that 5-minute candle. One minute left on that 5-minute candle. 1 minute left. use a daily upside breaker as your risk, encompassing that that daily open. That's about 3 to 1. Okay. I like how this 5 is going. Okay, so I like that separation now. So let's see if we can just take a breather. Take a quick breather. Pull back just a little bit. That next 5-minute candle is about to drop in 10 seconds. Make sure we clear that 694.36. Just dip a little in and I'll take it. If you took the ripple at face value, you were potentially rewarded already. You're already in position. You took the risk, you allocated the risk. You're maybe up single digits, high single digits, low double digits. Your runway's into 695. What a push. What a push. Ripple. Anyone take the ripple? Okay, good. Yeah, it looks like once you get to 695. The retest camp, not yet. We're clearly above that 694.36. Headed towards that PMH. That's your destination. So look what it did. It dipped into the jaws of the gap and it took off. This is identical to what took place on Tuesday, I believe Tuesday. Last week, Tuesday or Wednesday. It might have been the week before that, but we will. I will pull up the chart to show you. And VIX falling off a cliff beautifully. So what they wanted to do here is trap these shorts and then take it. So now we're at this PMH. We're at the 695, right? The question now becomes, do we take a breather? Do we take a breather before we make that next move to the upside? Okay, so if you took that, beautiful, hit target. Okay, that was basically 66 cents. If you're waiting for that pullback, you're gonna have to keep waiting. If you're waiting for that retest, you have to keep waiting as well. If you're babysitting runners, you might be salivating over this here into that dead upside target. If you can get above here convincingly, right, and you can get above that PMH, right, 694.45, 695.45 is the next move, but that's reserved for the folks who have this entry here. So in this case, what I'll look for is some sort of rejection and head back up. Just to give you some context, look how close we are to ATH, guys. Look how close we are. So we have this daily upside target, and then we're right there. We are right there. Right? We are right there. VIX falling off a cliff, giving you the read there. It needs to hold below 16. Q's taking off. Once Q's got above that PML, that was a beautiful, beautiful push. Beautiful, beautiful, guys. Good. So they hit this destination, and now the second destination is there. All-time high. This is all-time high town. Okay. All-time high-ville. Okay, all-time high-ville. It's up there. So look how close we are. This is primarily being driven by the Qs. Okay, that rotation to the Qs. Let's see what MU's doing. MU's not doing much here. What's really moving and grooving? Let's take a look real quick. If you did catch that, phenomenal job, guys. Phenomenal job. Robinhood taking off. Google taking off. Broadcom trying to go up to 1%. Apple is above 260. So it looks like it broke that resistance. Intel, 2%. GM up. GM did report earnings, so that might be earnings. Micron up. United Health down. CVS down. Warby Parker down. Team down. Okay. Anyone still holding runners? Anyone still holding runners? So this is the Ripple Army. You got compensated. So now, same thing applies. Now, if we get above 695.45, only thing is, bigger picture. Now we're in that rejection zone, deep in the rejection zone. Okay, let's see what does take place there. So what that simply means when we're in a rejection zone, it's if you're going to go long, it's best practice to go long off those pullbacks. If you're going to go long, it's best practice to go long off those pullbacks. This already took place. Wow, what a move, guys. What a move. I'm trying to find a seat on this train here. PMH retest, what I can think of. PMH retest 695. Shallow. Okay, in pursuit of these highs, so about 1-to-1. Optimal outlook into all-time highs. So let's see if this 695.45 can give us a little bit of friction. At least it pushes back into PMH. All right, so somewhat of a late entry, but this is the most shallow area to get involved. So this entry might not be available once again on this current push in the next few minutes. So I'll probably settle for this one into a push into ATH. I love how we're collapsing below that 16 on the VIX. Let's see if we get a 5-minute pullback, slight 5-minute pullback. We have that first wave in that PMH converging there. Let's get the likes up, guys. Make sure to like the video on YouTube. Make sure to subscribe. Let's see who caught this. I was just a couple seconds behind. 63% close last runner. Beautiful, beautiful, beautiful. 32%. Beautiful, beautiful, beautiful job. Joe, 40%, one left. That's how we do it. Anyone else? 2% of the portfolio. Good, good, good. So this is shallow. This is last minute, the cheapest way to get involved in that expensive push higher. Right? Of course, you want to wait for this nice little push to the downside, but there might be a scalping opportunity here I'll look to entertain. Allocate risk there if I can get that price action combination. So we smashed through two. Targets. Daily upside target. If you're looking to go short, you're looking for that complete collapse below 695. Or maybe get that shooter on the 5-minute. Maybe fall back below that 695.06. All right. Risk reward, the short looks favorable. See if we can come back into PMH, retest it. So invalidation marker would be we hit exhaustion here and we continue to push lower. So it's going to be very evident. If we do come into this territory, I could see some signs of buying. If I'm going to be right or wrong, it will be very evident. Because the Qs, guys, the Qs are on fire. The Qs are on fire. See, we get a nice little drop, continue drop. If you're waiting for healthy, healthy's here. Okay. If you're bearish, if you want to go counter trend trading, you want to go fishing for bearish setups, you're looking for that break of that candle's low. 695.14. So let the bears clear out. Go, go, go. Come drop in. Did dip into it. Come into it slightly. One little drop. One little drop is what we need. Ideally, I want the VIX to stay below 16. See if we can come right into that box. We are testing that nice wave. In pursuit of getting it off of support into the break of the downward compression into 695.45 and into a potential push into ATH. So let's see where we are. So let's see if we can dip one more time. One more time. One more dip. One more dip. One more dip. The trigger for the one to take it is up above these highs, but I want to get it near off support. So think of like a bull flag, right? If I'm going to get that bull flag, I want it off support, just to give me a little bit of cushion when price does come to that resistance. Just come a little bit lower. One little drop. I did tap it quickly there. That was a quick little tap of that first wave. All right. Let's see if we can grab those highs and then come just a little bit more. I'll be patient. I'll exercise my patience here. Patient, patient, patient. Come in. One more little drop. If you were able to get filled right here, all right, you have a good seat. You already defined your risk. You allocated your risk. You know that 695 needs to hold. So I'm just looking for an entry here. If you're going short, we already broke below 695.14. So maybe your risk in that case, if you're going the other way, is new highs, right? New highs. Whichever side you're playing, just make sure to define your risk. Make sure to define your risk. Come a little lower. Okay, come on. Okay. Come right into that box. Right into that box, go hammer. When we get to that box, I want to see a nice hammer. Out of there. Okay, I'll take it right there. And the call's right there. So you can start to hammer out. Want that 695 to hold. 10 to 15% is the risk. We're looking bearish on the 5. But that's just leading us into a nice little pullback. Okay, there we go. Up 6. If you did take this, manage accordingly. TP where you need to. So I need some follow through. I want this to be a full hammer. Right, there's a lot of selling on the 5. So see if you can break above these candles highs. 696.26 for the break of that flag. Go, go, go. Go, go, go. Okay, up 11. TP where you need to. Take majority off right there at 11. See if we can hold that level. All right, we're getting bounces, we're getting pushes, we're getting bounces, we're getting pushes. I want that 695 to hold. I want 695 to hold. That's my risk right there. 695. No close below 695. Looks like he wants to pull back a little more. Okay, I'm gonna close it right there. Close it right there. Okay, stop that on the runner there. %20 on the runner. Okay, if you're bearish, you're happy. If you're bullish, did give a nice little opportunity, but nothing enough to really get it back the other side. So worst case scenario, small green, stop out, break even. If you're bearish, you're happy. I came down to that 695. Got back to that 695 and completely fell off a cliff of that 695. Fell off a cliff. Make sure to like the video, guys. Make sure to subscribe. Make sure to subscribe. VWAP bounce. Yep, VWAP bounce 694.50. You just saw the chat. Look at the 5 minute. You took that short, Mixon. That was a nice short on the 5. Let's see if he wants to get back all the way to VWAP, all the way to that territory. The top of that orb. That was a nice drop. About 40 cents. So in this case, my line of thinking was to see if we can get one little bounce for a continued push. And it looks like we were just exhausted by the time we got up there. So we did come into VWAP, bounce out VWAP 694.25, 694.52, 51-ish. See if that's enough to get us back to 695. To get us back into 695. All right, so just 2 scalps, directionally wrong on the scalps. All right, little last minute on the scalps, but still was able to extract some profits. Okay, so now that 15-minute chart, we're in that rejection zone. Things are getting very interesting. I want to take a look at the hourly. The hourly, we're inside. The 5, we're starting to go hammer. What a hammer. So even if you're short there, if you're not taking profits, those profits are quickly evaporating. Those profits are quickly evaporating. Okay, and the thing is, guys, our ATR is not a massive ATR. Okay, our IV is very low. So it's see profit, take profit. Okay. Unless you're catching one of these juicy drops or pops. Or like this. This is it. If you caught that, that's it. Okay. See if we're ready to reclaim that same area. Can we go back and reclaim that territory? If we can, I'll look to re-engage after getting stopped out. So it made that pit stop, got that drop, And now let's see if we can reclaim that territory. I'll allocate the same amount of risk as before, and I'll take it right there. Some in the calls here. Want that 695 to hold. Okay, up 4. Go, go, go. Want that PMH to hold. Okay, up 13, up 17. TP where you need to. Okay, I'm going to take a majority off right there at 15. Thank you very much. Okay. See if we can get above that level. So you see how we played the reclaim. See, there's some more left on this for us to kind of get that push into 694.45. Take a majority off 15 already. See if we get that nice little push, continue to push into 695.45. And this could potentially be a push into ATH if we get above 695.45. Still up 13. Go, go, go. So you see how that reclaim played out a little more beautifully based off the fuel on that, based off of the fuel from that bounce off that wave and the bounce off that VWAP. My risk in this case would be close back below PMH. If we close back below PMH, same thing as before, but just a little thinner. That'll be my risk. Okay. Okay, see if that PMH can hold. I like how the VIX is dumping. See if we can get that last minute push into 695.45 prior to closing back below the VIX, but prior to closing back below 695.08. Okay, I'll close runners there. Okay. So 3 trades so far, a little bit active this morning. So we'll look to slow down going to second shift. All right, 3 trades so far, all 3 were basically scalps. If you're still holding those runners, mark your line in the sand. All right, it's a see profit, take profit type of environment. If you're not taking profit, it's going to depend on where you land at the end of the day. If you're green or red, it's going to be based on if you're taking profit or not. All right, so in this case, I'm not taking profit. I'll be stopped out. In this case, not taking that quick profit initially, I'll get stopped out. Same thing here. It's got to take that profit as well, not reclaim. Okay, so it's been a scalper's paradise this morning, and 3 trades in first shift. So we'll look to slow down here. All right, usually it's one trade, 2 trades. But that reclaim, it's basically the same idea in this case, right? So even if I got stopped out with the majority of the position here, I can look to re-engage in that territory for that continued push after testing that VWAP. There's fuel based off of it. I didn't quite come into this box here, right? So I didn't quite come into this healthy box, that healthy bounce, but it did get that nice reclaim. Okay. So I'll let first shift conclude. Let first shift conclude. If you're still holding those runners, this thing might take off. The fact that I'm not in it anymore, you guys know the running joke. I was about to short. You took calls. Yeah, those shorts did look good. Mixing, they look good. So basically, it did go shooter. So that was the stop that I was looking for back to downside, right? So if I was wrong, those bears would get paid. That would be my invalidation marker. And sometimes, believe it or not, those are the best setups. The best setups are, as long as you're defining that risk and managing that risk, is when it can go. Is when your stop is the opposite thing taking place. So in this case, if you're short, your stop is these bounces lead to a break above those highs. So in this case, I'm long to see if I can get that bounce into the break of the highs. But regardless, even if you do short this, there's going to be a lot of traders who do short this and still have nothing to show for it because they don't take that profit. So we're still bouncing off the zone. So 3 trades so far, probably the most trades I've taken in first shift in a long time. So we'll look to slow down, although these 2 trades are basically relatively the same idea. Okay, so we'll look to wait until second shift. So far, what we did see is price dipped into the jaws of the gap. Let me show you an example of when that did take place, right? The reason why, what sets us apart is our data tracking, okay? I track the charts on the 1-minute chart years and years and years. I'll show you this exact, I believe it wasn't Tuesday. I believe it might have been 2 weeks ago. No, it's one of these days. SPY's chopping around. I'm looking at SPY on another chart. It might have been, let me go back. The 5-minute chart on SPY, not looking clean, right? We're not seeing those 3 consecutive candles. There's a lot of back and forth. This is yesterday. This is Friday, Thursday, Wednesday. Okay, here. All right, so Wednesday. You can see on Wednesday, we chopped around, we gapped up, we dipped into the jaws of the gap. So we initially broke above those highs, trapped there, broke above those lows, we trapped there, and then we start to pump. Once we start to pump, we accelerate, and continue to go, and then pull back into the key level and continue to push. So this is very similar to the action that we saw on January 21st. Okay, so you can see it dipped into the jaws of the gap up, continue to accelerate, pull back, bounce. But the only difference is at that time it continued to it bounced and it went for another leg. It bounced and went for another leg. This thing, it looks like it's primed for another leg, but it doesn't have enough participants. Okay, let's see if more bulls can start stepping in. Now, if we take a look at the 5-minute chart real quick, the longer we hang out here, guys, bigger picture, okay? It's very hard for me to go long into those continuations. I have to take those dip buy opportunities. Okay, those bounces. We're running out of room. Only issue is now, subconsciously, we're constantly thinking of this all-time highville. All right, we're very close to all-time highs. All right, so there's a few ways to approach it. My initial approach was to see if I can get that nice little push, hold to this level, and then continue to go. Okay. Second approach can be you get that break and hold above this territory, and then make that run up. You're on price to sprint in this case. Okay, you're going to look for the markers of a breakout. If you're in position from here, if you're still holding, you have a further dated contract, your risk is defined. You have a front row seat into potential push into that territory. So by the time the test of that level does come in, you're already in profit. Okay, that's the main thing. The main thing is putting yourself in position to where you're in profit when a test of resistance comes into play. Okay, on the daily, on the hourly, I should say, we're inside. All right, let's get the likes up on YouTube, guys. Make sure to like the video. Make sure to subscribe. Okay, let's get the likes up. If you're a first-time viewer, let us know you're joining from. Long-time viewers, take the next steps. Join our community. Our live trading mentorship community. Our team absolutely take advantage of the best opportunities here. 63% there. 32% there. Bull flag, thank you for the update, JB. Another storm. It looks like it's going to snow again on Saturday. So, well, I like this. So it looks like Apple and Microsoft are the only ones that are good to go. It's snowing here every day since December 1st. Wow. Every day since December 1st is a lot of snow. Anyone in position to play ATH off this territory, off this level, off that last idea? We got some diamond hands. If you're a VWAP, if you're in the VWAP camp, this is your entry. Okay. If you're in the VWAP camp, that's your entry. Just keep in mind, we're moving at 45 cents per 5-minute candle. 45 cents per 5-minute candle. All right, they're just chopping things around. Waves are waving back the upside. I'll wait until second shift to take another trade. Right, because when you start taking more and more trades, what happens is you want to take more and more trades. Right, it's perpetual. When you take more trades, you want to take more trades. You get into this, you start speeding up. All right, so when I notice myself starting to speed up and want to engage more opportunities, I automatically just say, hey, you know what? How many opportunities did I engage? If I have 5 shots to take during the day, am I going to take 5 shots in under an hour? Right, so I try to bring myself back to earth. All right, and maybe that might be fueled because of the move of the miss of this clean move. All right, but all 3 trades did work in my favor. Sometimes you miss a clean move, and you want to reproduce it. And really and truly, even catching this move, all these 3 of these trades do make up more than that entire move. So back to 695. So do we break down here, guys? Do we break down here? What are we thinking? So this is our second interaction with this level. What are we thinking? Do we have enough fuel off that resistance to start breaking below 695 and falling off a cliff? Is this our time to fall off a cliff? Is this SPY's time to fall off a cliff? That lines up with the higher time frame. We're inside on the hourly still. I have a new hourly candle on the intraday candle coming in exactly at 7 minutes. So if I'm building a short idea, it will look like this. Back towards this daily upside, back towards this daily upside target. So see if you get a nice clean close below this box. Same thing. It's really coming down to 695 and 695.08. That's what's really coming down to. This is about a 1.5, 1.6 to 1. What would be the invalidation marker? The invalidation marker in this case, with a 0 DT, you probably can't sit through 46 cents. That's going to be greater than 15%, 20%. 46 cents is more or less like, think of it like this, just a rough estimate. Think of 48 cents, close to 40%. All right, think of 20 cents, close to 15 to 20%. The reason why I say give or take is because of the things impacting the contracts. So a good way to understand it is 48 cent risk. It's about high 30s, mid 40s percentage risk for those zeros at least. All right. So if that's outside of your risk, you have to take smaller risk. If it's within your risk, if your risk is, hey, you know what, 50%, 50 cents, that's fine. But your reward can't be 25 cents. Okay. Okay, starting to break down there. If we can come back, retest 695. Just nice little retest. That short is looking good. If you took that break, beautiful job. If you allocated that risk, structural break as well. VWAP 694.64. 694.64 below us. Let's get the likes up, guys. Make sure to like the video. Make sure to subscribe. We got 20 plus people in the chat, 25 plus people in the chat. Let's get the likes up. I like how the VIX is spiking here. If the VIX gets above 16, we can start work its way into these lows down here. But the official key level is 694.25. All right, so I'll wait until second. Okay. I'll wait until second here, second shift. Clean up the chart a little bit. All right. So make notes. How did you do in first shift? How many trades did you take? What I'm going to do is I'm going to encompass all this into a key zone. A lot of key levels converging in this territory. TOG, PML, daily upside breaker, top of the orb, daily upside target, all encompassed in this territory here. That flag was nice, double flag. IWM, let's take a look at IW. IWM. Yeah, IW, nice reclaim of that PML. So IWM just rose from the ashes. It was selling off, retrace, reject off the waves, starting to climb back up. IW did get into the highs of the day, and now, of course, it's not really expanding or moving any sort of direction. It's just bouncing back and forth. So now the question becomes on IW: do we trap here and go back to the downside? Might be a brick wall trampoline type of scenario on IW. If you took basically the inverse orb, you're in the green. Whenever price is moving sideways, those expansions will be tough. So IW, the best area to potentially get involved in IW and look for those pushes to the upside can be off of these lows in this territory. Okay, 2 minutes away. Qs. Qs, you can see Qs did do the same thing. Got above the VWAP, got above that 629.62. And the Qs are above that PMH, similar to SPY, and they're testing that PMH. So if the Qs are really bullish, we want to see that 630.31, 630 territory hold for potential flag push up to the upside, continue push to the upside. The Dow, on the other hand, is just falling off a cliff. So the Dow, retrace, reject off the Dow. The Dow trade differently than SPY and the Qs, right? It's less volume. So the price action is not going to be as clean on the lower time frames. Okay? It's not going to be as clean. If we take a look at the names that we're running this morning, MU, pulling back at the first wave, AMD. Okay, nice push there. What was the other name? TSM. TSM potentially flagging here on TSM. If SMH and the semiconductors start to fall off a cliff, Q start to slide to the downside, pay attention to TSM. All right, nice breakdown. Gradual breakdown here. So from second shift on, we'll look to size down significantly and then take advantage, maybe 2 more trades here. Good morning, Hero. Had a hard time getting sleep last night, so I decided to take the day off. Historically, I have never performed well when I'm overly tired 100%. That is very smart, right? That's a smart thing to do. Over time, when you do trade, you know what works for you, know what doesn't. So anything that doesn't put the odds in your favor, gotta stay away from it. Sometimes it's a day. Sometimes for some reason, some traders don't do well on Tuesdays or they don't do well on Fridays. All right, so instead of trying to, and there might not be anything quantitative behind it. Just can just be just means is how things just play out for some reason. It might be best to remove that day off your schedule, literally. Yep, enjoy the stream. Let me know how the audio is, guys, on YouTube. Let me know how the audio is. Let me know how the audio is. I know we had some audio. I went back and watched the video. The audio wasn't too bad, but it was a little quiet. I didn't change any of the mic settings, audio settings. So I did try to keep it as high as possible going to today. If the issues continue to persist, then this mic might have to get another mic. All right. It's a good mic. It's did its job. But if it's at the end of its life, we'll have to get another one. Clear? Okay, good. Smash the like button, guys. Smash the like button. We're not seeing a lot of action the day before FOMC. Tomorrow's the action. So we took 3 trades already, 3 scalps. Didn't catch any of these clean moves. Just had to really take profits. Runners, most of the runners did get stopped out of break even or red. Right, but just taking those profits really helps. So the outcome can be completely different if I opt not to take the profit. Right, from a directional standpoint, you still can be right. But again, are you playing the game of being right? Or are you playing the game of trying to stack the most net positive transaction as possible? All right, define the game you're playing. Okay, so when we take a look at it, we got this low down here, we got this low down here, we got this low down here. So we are pushing higher. Okay, we are pushing higher, but we just seem to come into this brick wall here. So breakout traders, of course, they're keeping a close eye on that 695.45. All right, what they want to see is a break with volume, with force. All right, and that's the push into ATH. All right, ATH is at that 696.09. So it's 4th time the charm. Okay, 4th time the charm, we'll see. Okay, TSM continues to go. What's NVIDIA up to today? NVIDIA, nice flag on NVIDIA, okay. Nice flag on NVIDIA on the 5, you do like NVIDIA. Okay, sound is good. Tesla, our friend Tesla, what's Elon up to? Okay, right at that PML. Where's AVGO? Where's Apple? Apple is ripping and running. Look, it was ripping and running, and then it course corrected. Okay, where's MSFT? MSFT has been asleep at the wheel for multiple quarters now. So let's see if MSFT can get it together. Of course, fundamentally, MSFT at this point is a blue chip. Okay, you might as well. That's why it's in the Dow. All right, the MSFT is in the Dow actually. All right, I believe it's the biggest tech company in the Dow. All right, so MSFT is as stable as it gets. Microsoft that is, when viewed from the lens of a tech company. All right, so we're going to use this low, although this low is relevant. We'll use this low because this low is still higher. So just to keep that visual representation of that uptrend, we'll migrate to this low. All right, some of you might be drawing this, which is fine as well. But the big thing is we're making a series of higher lows, relative equal highs. So the pattern that comes to mind, okay, the pattern that comes to mind, strikers, is this. So put in the chat, is this pattern bullish or bearish? Is this pattern bullish or bearish? Okay. So this pattern here relatively equal high resistance, okay? Higher support. And it's going to come to an inflection point. Okay? And this particular pattern is a bullish pattern, especially after coming off of a bullish leg. And as long as that support is holding, it's a bullish pattern. Okay? But the reason why it needs to be bullish is, where is it coming from? Where is the leg? In this case, the leg might even incorporate the fact that we did go from pre-market activity. If you're drawing it from these lows, you can argue this is the leg. Okay? So this is the leg. These are the two lows. Okay, now we're starting to push here. We have a nice push into ATH awaiting. Right, so I still make the argument that if you're going to take it into ATH, best thing to do is to take it into the break rather than opening a position. But again, do what best suits your trading style. Nice bounce off that 5. Look at all those wicks up there on the 5. If you take a look at that 5-minute chart, let's take a look at it real quick. Okay. Look at the 5-minute chart. Okay, so in this case, we blast, we continue to go, we get that nice little push, buyers existing there. So now if I move this here, actually let's do this. So if the bulls are able to get a close above all these wicks, okay, they get a close above all these wicks, then that basically means they earn their path to all-time highs. All-time highs are right there. Let me take this off. Okay, so even if you took this short, say if you did take that short, 22 cents. All right, that's about half the current ATR on the 5. Is this it? Is this the push that we need? Is this the break that leads to the push to all-time highs? Is this the break we need to push into ATH? We're starting to see the Qs starting to go. Nice flag on the Qs. We're starting to see, where's the Dow? Our good friend, the Dow. If we can get a little bit of separation, at least some separation. All right. A little bit of separation and a potential come back. We're directional on both the hourlies. If you want to take that 212 on the 1, this is the break. But before you even think of that entry, define your risk. Where is your risk? You should have a visual idea of where your risk is, and also a numerical level attached to it as well. If we can get above 695.55, that might be the gateway. See if I can take there we go. You see that? Now come back and retest it. Can I come back and retest it, or is it gone? Is it gone? All right. Come back. Or is it gone? So that's how you want to play the same setup. So waiting. Breakout technicians who masterfully trade the breakout, they can tell the difference. Are they going to be 100% accurate? No. But they know what to look for. If you pop your volume, you're going to probably see, if you put your volume on the chart, We're probably going to see a nice volume push to the upside. The only issue is this is a low ATR push into ATH. Okay, we're in the neighborhood. We are in the neighborhood of ATH, but there's a low ATR push, meaning we're crawling to. We're not sprinting. We're crawling. Okay, let's see if we can come back and test it. Come back and test this territory. If you're playing the trap, first shift trap, you want to break below 695.43. New 5-minute candle here. See if I can get involved in this territory here. It is bouncing off 695.55. 5-minute candle, vertical continuation, needs to break above those highs. We're starting to see the level 2 speed up here. Level 2 time and sales speeding up. Level 2 time and sales speeding up. Okay. Okay. I'll take it right there. I'll take the calls right there. Off of that 695.95 bounce. Significantly less size here. See if I can catch that nice little push. Risk will be break back below 695.45. See if I can get that pursuit into ATH. All right, I wanted to get it here, but that might not be available, as it's really using that 695.55 as support, but at least I'm not paying for it up there. I'm still paying for at the high of the day. But now all I'm really trying to capture, team, is this. That's what I'm trying to capture, okay? That push from there to there, okay? See if I continue to push. And the contracts are moving very slow today. All right. No surprise, ATR is low. We need ATR. We need IV. IV is important, single-digit IV. So let's see if I can pursue this into all-time highs. If you did take that from an earlier entry, if you took that break, make sure you're taking some profits off. If this is if you're allocating less size, manage accordingly. Up 5. Do what you need to do. Okay, do what you need to do. I'm going further data here. Cheaper contracts. So at least no close below first wave. Okay, I'll give it a little bit of time to get there. The Qs continue to show strength. The 5 is bullish. So unless I see some interruptions on the 5, see if I can hold this position. Okay. This will turn into a first shift trap once we break below that box. Okay, once we break below that box. VIX headed south. All right, let's see, get this push into ATH. Do we get to all-time highs here? Do we get to all-time highs? Smash the like button on YouTube. Everyone joining us on YouTube, make sure to like the video. We already took 4 trades. A lot of trades today. A lot of scalps. All right, 3 trades worked in our favor. This is our 4th trade. Did see a little bit of green. Again, this one is more of trying to see if we can get that push into ATH. Using less size, using further data contracts. So we can be on record to say we took it into ATH. At least something. All right? In the meantime, if you need to take profits, please feel free to take profits. All right? Don't fall in love with ATH. Don't let that make you blind. Don't get blinded. Okay? Up 16. There we go. Up 20. There we go. Go, go, go. Now we want to see the level 2 and everything start to speed up. So in my case, the no close is here. We want to see a lot of participants start jumping in. The last minute Larrys to start jumping in. And we got room to 695. Did see 20. There we go. Go, go, go. Go, go, go. 23. 27. Take some off right there at 23. All right. So down to last one here, 695. We're almost at all-time highs. This is my no close. No close below here. And officially, let's see if we get that push into all-time highs. 30. Up 30. We're at 695. We can't get some pushback there. Go, go, go. Go, go, go. 696.09 is ATH. We got that already for a nice push to the upside. We walk through the setup. We're at 30%. TP where you need to. Don't fall in love with ATH. Okay. We can't get a rejection off 695. If you took this, congratulations. 696.03. We're 6 cents away. 6 cents away. Up 30%. Okay, there we go. There we go. There we go. New all-time highs. We did it, team. Up 40%, 38%. New all-time highs. Let's see if we get a quick acceleration of all-time highs. Okay, up 41. Up 41. Now I want us to stay above 695. 696. That'll be my no close. Beautiful, 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 beautiful. And now let's see if we get that impulsive buyers starts to jumping in. And I'll close it right there at 41. So we walked through that step by step. We took it to all-time highs. You saw it here first. SPY made all-time highs. All right? 40%. Just like that. Just like that. Okay? Just like that. That was nice. Okay? That was nice. Now, this is where retail is taught guys to go long. All right? This is where majority of people start going long. Their alerts start going off. They start going long here. All right. Even this, I'll make the argument. This is a little late to the party. From my lens, this is a little late to the party, but this is the best bet for that break and continue push higher. All right. But since this is major resistance, we talked about what pattern is this. So we're not just identifying the patterns and telling you go home. I'm not saying identify the patterns and go. I'm identifying the pattern. Okay, and we're putting things in place to play the pattern. Am I going to play this push into ATH with full size? No, I'm not. I don't need to. Why? Why don't I need to? I already took 3 trades that worked in my favor. So now I can size down, go a little further dated, and enjoy a nice little push. Feed that appetite for greed. Okay? So this is exactly what took place, guys. So knowing that we know this pattern, the only reason why this pattern is bullish is because of the leg. Where is it coming from? I talk about this in the boot camp in detail. You need to know these patterns. It's not 500 patterns. There's specific patterns you need to know. Now your job becomes, okay, to exist here. Okay, my job becomes, I like to be support into the break. But if you're going to play the break, there's a handful of things you want to see. You can play the break, sure. But you can play the break, slight pause, retest, pull back, whatever it is. All right. But your you have to define the risk first. Okay? You want to have to define the risk first. If you took that, put a $sign in the chat. If you took that last idea. So today we're 4 for 4. Okay? 4 for 4 today. Now let me check in the chat. Okay, let's see. I'm a little behind. Beautiful break. JB was on that right there, on that break. As always, JB's a great technician. We got a great bunch of great, capable traders in our group. It's just amazing to see. 6 cons, 38, 6, 15. Beautiful job, Kevin. Keep stacking those wins. All right, keep stacking those wins. You're doing a tremendous job. All out 30%. I don't recommend trading through an appointment 100%. You're not fully. Okay, 1044. I believe I took that at 1041-ish. So you guys took that break. Good. 26% for Elion. Beautiful. I got 50% profit on that ride. Beautiful. 100% hero. Tardy to the party. But still walked away with a refreshment, right? 1046, beautiful. And the main thing is not falling in love with going to all-time highs, right? So even me, even though it's a smaller position, I am still paying the trader, okay? At 20, 30%, I'm not going to let that, I'm not leaving it on the table. Okay, 2026, don't leave anything on the table, all right? Take everything. Leave very little on the table. SPY gives you 20%, take a majority off. It gives you 10, 15, take it. Don't leave anything on the table. All right? And then you can start playing with a runner if you want. But just by doing that and having that systematic approach, give it a little bit of time. Give it a little bit of time, and the way you view trading completely will change. All right? When it comes to the technicals, we got the best technicians in our group. Okay? No one is going to out-technical our members. No one's going to technical our abilities. That's not going to, we can see it. Okay, we can see it. It's just a matter of execution, being present, defining that risk, taking what's on the table, and letting it stack up. If we can do that, guys, we give ourselves the best chance to beat the game. All right, so I can continue to trade. I can continue to use less size. I can continue to take lottos, but that's just bad practice. Because the thing is, those little things you do as for fun, if you do them over and over and over again, they slowly turn into habits. So if you're done for the day, multiple opportunities. A lot of you caught this. So kudos to everyone who caught this. All right. See, I was a little frustrated. I didn't catch that. Okay. And that kind of led me to identify this setup, but not fall in love with it to the extent where it needs to continue to push. All right. So if you don't catch it, your time will come. Another opportunity will come. There's not a shortage of opportunities. We have the abundant mindset. The reason why I say that we can't have FOMO, of course we're going to have FOMO at time to time, is because the next setup is just as good. There's not a shortage of setups. The primary driver of FOMO, fear of missing out, is you missed out. The one way to combat that is understanding that there's actually tons of setups every day. So did you really miss out? Right? Did you really miss out? Now we're rejecting off ATH territory, no surprise. Right? But we wrote it officially. So that's our first ride into ATH for 26. And 25, we did it multiple times strategically, same way. So nothing really changes. The years change. The days change, the months change, the system stays the same. 10:46, more relaxed after the trade. So breakfast time, I have one more trade left for quality opportunity. If not good, no more trading today. Absolutely, guys. If you're green, stay clean. You did your work, less than 2 hours. All right, less than 2 hours. We're putting a beating on the market, right? But we want to just remain humble. We want to remain calm. And we don't want to get too arrogant. But so far this month, Look at SPY's. To beat the market, just look at SPY, the Dow, the Q's performance. All right? And look at that. And we can, let's just say this. It's not very difficult to beat the monthly performance of the market in a week. But you have to have that right process. You have to give yourself some time. So now everyone going along, after their alerts go off, after just got trapped because they don't know any better. They're not properly trained. You take the move into the break. Or you wait for the break for it to come back into it. I'm feeling so lazy this morning. Don't want to get out of bed. Oh, nice. Got on the TV. All right, so if you caught that, I'm still trying to figure out why I was a little overactive this morning. All right, sometimes I get a little. I mean, you gotta love trading, guys. If you do this for long enough, you get beat up for so long, you lose so much over time. But when you start really finding your way, and you start really refining your system, and you get to a certain point, this becomes very enjoyable. So my wish is for the ones who are taking the beating over the head, right? For you just to take your beating accordingly. Learn from it and get to the point where you're enjoying this. You're enjoying the ups, the downs. It comes with it. All right? It's not just green, 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 green all the time. Okay? It's not just green, green, green all the time. But if you can withstand the beating in the beginning, if you remain a student, if you have that growth mindset, all right, you'll start enjoying the game. Even when the losses are still there, because you have ways to cover the losses. The fact that you, George, want to see us all succeed means so much. 100%, guys. There's more than just candlesticks, all right? I always say there's more than candlesticks. I truly believe everyone has a calling on their life. Right? I truly believe that we were randomly put on this circular rock in the middle of nowhere just to be here. Everyone has purpose. Everyone has something to give. And this is what I have to give. All right? So this stuff, since I put so much effort into it, everything into it, believe it or not, I don't like to use the word easy, but it comes easy to me to identify these patterns. It doesn't take a lot, because that's not because I'm some super genius or I'm some next level brilliant mind. It's because I just put the time in. Right? So you can use this same tool. You can use the same tool by learning, by educating yourself, to get small elements of your time back, to start doing the things you're truly meant to do. All right? We don't have a lot of time left. We don't have a lot of time left. Okay, nothing. If you think trading is risky, if you think trading is risk, which I argue is calculated risk, and as risk is everywhere, there's no guarantees in trading, but where are the guarantees? Who's selling guarantees? There's no guarantees. Tomorrow's not guaranteed. All right, so from my end, if I have this information, what's the point of me hoarding this information? Okay, I can do something. I can do for self, but that's it. All right, it's not fulfilling at all. You're clicking buttons. So you have to use this, all right, to do whatever your God-given mission is. All right, and I truly believe that. No one's here for no reason. Things that come naturally to us are gifts that are born with, 100%. I do agree, and this is readily available to everyone, guys, especially in the climate that we're going, especially in the direction we're going. being self-sufficient is going to be very important. Self-sufficiency is going to be basically freedom is going to equal self-sufficiency. You cannot be free in this new era we're stepping into being self-sufficient. It's not about hoarding a bunch of money, but it's about just having the ability just to be self-sufficient and take care of the people around you and take care of people, other people you may not know as well. Have an impact. Nice little pullback, nice little bounce. And now we're at those all-time highs once again. Do I want to touch it? Absolutely not. Why? We already took 5 trades. All 5 trades worked in our favor. We took it again. So at this point, I'm more or less operating out of greed. I'm more or less operating out of greed. So in this case, if I'm looking for something, I want to see a grab of these lows. I want to see a complete dump. If it continues to go, okay, by all means, you can continue to go. But we are at all-time highs once again. So now let's go back. Let's rewind the clock real quick. So on Tuesday, this exact time last week, we saw that drop. Everyone hits the panic button. Pull back, pull back, pull back. We know the drill, guys. If you do this for long enough, you know the drill. The number one question that I pose to you guys is, okay, the term, we coined a term, market elasticity. How quickly can the bulls bounce back off that 2.5, 2.6% pullback? We got our answer. Okay? 5 days. 5 trading days. With minimal catalyst. Of course, we had some catalyst last week, but this week we had minimal catalyst. All the catalysts are in front of us. So it took 5 days. 5 days exactly. So now that tells you what kind of bull market we're in. Okay, this is an historic bull market. And there's no stopping this thing. There's no stopping this thing. Okay? No stopping this thing at all. It just continues to go. Because every dip is being bought. If it drops 20%, there are buyers. I don't even think we're going to drop to 20% because there's too many buyers everywhere. Unless we have a seismic catalyst that the market has not priced in. Right? There's too many buyers above 20% for the dip buy. There's too much demand below us to even get us to 20% territory. So what that means is if somehow, some way we do maneuver our way to 20% territory from all-time highs, which is bear market, that's an opportunity. Are you going to trade a 1 DTE? And it's not a one-day opportunity. Okay, that 20% opportunity, okay, is a 20-year opportunity, 10-year opportunity. Okay. If you're just joining us on YouTube, make sure to like the video. Make sure to like the video. Make sure to subscribe. We did take 5 trades. I would love to take more trades, but we took 5 trades. It's been quite some time. We went 4 for 4 today. Our best trade was this one right here, that last minute trade into all-time highs. Go back and rewind to those different times to see why we took those trades, what the entry was, the rationale, and this one was a missed trade here. All right, so scalp, scalp, scalp. A nice expansive move there. And now we're stuck at all-time highs. So let's see what else can join us at all-time highs. We talked about the importance of the Qs, okay? The most important thing for the Qs was what, guys? 630. The Qs are above 630. So the rotation, small cap, mega cap rotation into earnings week is playing out. All right, now the head and shoulder on IW. This is why you need to be part of the pre-market stream. Not only do we go over the levels, but I give you the bigger picture reasoning. We put the pieces together. So now IW, what pattern does this look like? Okay. Somewhat of a head and shoulder possibly. Neckline aligning with that 200 EMA on the hourly. So that 200 EMA on the hourly needs to hold. Okay, that 200 EMA on the hourly needs to hold. So we are seeing that rotation back into tech, mega cap tech. All right, I used this analogy before. Think of it like this. Okay, I've used this analogy before. Say there's a certain amount of dollars that need to be allocated into these different bins. Okay, into these different cups. One cup is, these are different vehicles for the dollars to be allocated. So, say pretend all the dollars that exist, that are in circulation, that need to grow, they need to be allocated in one of these bins. Okay? Of course, you have the equity market, but you have more something. We have the Qs. We'll get a little more specific. Okay? We have mega cap tech. We have the entire S&P. Okay, we have the entire S&P. We have the entire S&P here. Okay. And we have the Dow here. We have the Dow here. We have, I'm keeping a close eye on SPYs, making a nice push into all-time highs once again. We have IWM. Okay. And we have, of course, now we have gold, Bitcoin, and other asset classes emerging. That's fine. But now we're just focused on these four. So this is the equity market, of course, but we'll focus on these four. So this, to kick off 26, so there's a pool of, again, there's a pool of dollars that need to be allocated at all costs. They can't just sit around, just for the sake of the example. Okay, to kick off the year, most of the dollars went into IW. Okay, as they go into IW, they were coming out of here. This was shrinking. This was relatively staying the same. This is relatively staying the same. And we're seeing an expansion, outperformance on IW. Okay, so IW was like this to kick off the year. So all those dollars are going to IW. Now, as we head into earnings season, what we're seeing is those same dollars that were in IW, okay, they're headed back towards, that we're starting to see it going back to here early. We're not seeing it yet, but I'm saying we're going to start seeing it there. So there's only a certain amount of dollars in circulation for the sake of this example. As they go out of here, they go into here. Okay, now SPY is already at all-time highs. So for us to make that push into all-time highs, more than likely those dollars need to get out of small caps, start coming into mega caps, and then we get the earnings of the mega cap names, and that takes us over the top. So just keep a close eye on that. Okay? So that's a quick example of just thinking of that rotation. A quick analogy. So now we're coming out of IW, small caps. Think of it from this perspective as well. Difference between small caps and mega cap tech. Small cap, there's a lot of tech in small cap as well, but it's more like diluted. There's not a percentage of leaders. It's just small pieces. Small IWM is composed of small piece of 3,000 stocks, unlike Qs, which are composed of the top tech names. So the names in QQQ, the tech names in QQQ are proven. Okay, they are proven names. A lot of the tech names in IW are not proven. They're not profitable yet. They're still trying to make a name for themselves. So now, if you had to rotate, what would be the best time to rotate? Would you not want to rotate when the mega cap names are reporting earnings? Because if the mega cap names take a slide to the downside, if they miss, okay, it's not going to be as dramatic for the mega cap names because now the impact on the small cap names is seismic. So it's also a way to hedge as well. It's a hedging technique as well. Okay. And rate cuts as well. So we're going to see what IW does tomorrow. We can see a lot of movement in IW, which can present a lot of setups. We're probably diverging here on the one. If you put up the RSI, sometimes you can just feel it. Okay, we made all-time highs consecutive times. We're running out of room. We're leaning towards a 99% chance that we do cut the rate. Or we don't cut the rates. No hike, no cut. Okay. And now we're just basically stuck at all-time highs. Stuck at all-time highs. 4 out of 5 green. Beautiful job. ERA on 1. Good. Okay. So tomorrow, we're going to see that dynamic play out in real time. So make sure to tune in tomorrow. Tomorrow we have a long stream. From 9:30 a.m. possibly all the way into the close. We're going to have the coverage of Powell. We're going to have the coverage of the press conference. Everything you need to put you in position to capitalize off the opportunity and to be ahead. We're going to see it take place first. Okay. 11:30 is around the corner. We'll do the poll and the stream poll. Not looking to take any more trades. Done for the day. That's probably. It's not going to get better than this. All right. If you keep trading, eventually you're playing to lose. All right. So if you're green up until now, guys, it's Tuesday. All right. We still have a lot of work to do. Okay. If you're green, you're kind of built a cushion. You built a cushion for this. Brace for impact. So, this stuff here. Rate decision. We're leaning towards 99% chance, no cut, no hike. We're going to have the press conference for you. Unemployment claims, PPI. Not only that, this. So, again, going back to the rotation, we're seeing some of the biggest names in the Dow reporting earnings this week. Microsoft, Meta, Apple, 3 major names in the top 10. Okay, 3 major names in the top 10. Tesla, I believe Tesla's in the top 10 as well. Let me verify. Should be in the top 10. Okay, here's the top 10. And Walmart got added to the NASDAQ 100, by the way. Here's the top 10. So here. NVIDIA, we know NVIDIA closes out the show. NVIDIA is the headliner. They always report last. All right, so we have Apple, Microsoft, Amazon, Meta, Alphabet, Tesla. Yeah, Tesla's in there. Alphabet, A class, A and C class, the differences, voting. Walmart. Look at that, guys. Walmart's in the top 10. Broadcom is the top 10. So NVIDIA, not yet. So semiconductor, tech. We have Amazon. So let's go sectors. XLK, XLY. That's Amazon is classified as a discretionary, although it's tech. XLC, Meta is classified as a communication. It's not classified as tech. Google, guess what? Google is classified as communication. It's not classified as tech. Tesla, it's not classified as tech. It's classified as staple. Walmart, classified as a staple. Broadcom, classified as tech. So what we're seeing is basically tech and discretionary. Tech, discretionary, communications, and one staple. This top 10 tells you what the most important sectors are for the upcoming decade. This top 10 tells you what the most important sectors are for the coming decade. And all the other sectors are just for hedging. Okay? Look at this, guys. This is what the daily candle looks like on SPY. Boom. All-time highs. Okay. That's so now, hindsight, okay, that inside day, we break, we run away. That inside day, we break, we run away. Where do we run away into? All-time highs. So this is the market elasticity, what I'm talking about. The bullish elasticity right here. So look how quickly, rubber band effect, okay, we drop and spring right out of there. Okay. Gap down, drop. Takes us what? 3 days to close the gap. 3 trading days, that is. And after this drop, only took us 1, 2, 3, 4, 5. 5 days. We had a bunch of gap ups mixed in there, of course. Okay, gap up is the bull's cheat code. All right. If they want to get over some critical levels with minimal effort, they just gap it up. Okay. That looks like another orb worked and gave another boring ATH, 100%. And that orb played out beautifully, Artem right here, right? That was beautiful. This was 15-minute, by the way. This was a ripple. This was a textbook ripple. Even got that hold. There was no real retest. And then skyrockets. Out of there. All right, so even if you caught that, you're done. So now in this current juncture, we're basically trading in this channel. Okay. So now, all right, what does this pattern look like? So you have to be able to identify these patterns as they're taking place. All right. And you have to know what they mean. Context is key. So rising resistance, rising support. Primary thing is tightening. Okay. So what this means is, yes, we're bullish, of course, as long as the integrity of that channel is kept. But the fact that we're tightening, okay, the fact that we're tightening or running out of room will lead us to potential inflection point off of a critical level. Okay, break of that support. This is a textbook reversal pattern. Okay. Textbook reversal pattern. Made a home safe. Cars were disappearing in front of us. In front of me. Wow. Yeah, guys, if you're driving, it's a snowstorm, guys, please be careful. Especially drivers. We got some crazy drivers. I'm glad that you made it home safely, JB. And kudos to you. I mean, taking those trades on the phone during an appointment, man, not easy. My goodness. All right, mobile ninja. So that's one thing I do need to improve, my mobile ninja skills. Right. So, I mean, I know how to trade on the phone, but it's always good to be able to do what you need to do without having everything you need in place. Do you have to do it to the same magnitude, use the same amount of size? No, but you still want to have the ability to open up your phone, identify a setup, capitalize off a setup. And maybe to mitigate risk, since you're on the phone, you don't have the holistic picture. You're more or less relying purely on the technicals of an individual name. You use less size. Right? So if there's more risk involved, use less size. If anyone is holding those runners, I mean, you did have to sit through a little bit of back and forth. Let's take a look at the contracts, what they look like. I got them at 55 cents. Okay. Power of options. They are now at 91 cents. 92 cents. So this did chew up a little bit of the premium. But again, less than an hour. Or so $40 an hour. $40 an hour. I believe that's yeah, Indiana. $40 an hour. I remember what we said in 2025. All right, meet your wage, then beat your wage. Don't play the other game. So every hour, and you might be starting at, hey, you know what? You might be starting at trying to make $10 per contract for this particular hour, which is fine. Because all you really need is scale at that point. Okay? $10 per contract might not seem like a lot with 1 or 2 contracts. With 100 contracts, that's $1,000. Okay, so yeah, beautiful. Right, I'm telling you, especially with options, guys, especially with options trading, I truly believe it's the way to go. Of course, you have the funded firms, you have a lot of those different things, but I would say your path to a payout. Of course, if you have a small account, say you have 500 bucks, and it's like, hey, do I buy, or $50? If you have $50, do I buy a challenge account for a futures firm, or do I open up an options account? With $50, I mean, you can't do much, but you can maybe try to save another $50. Okay, get $50 10 times, and then put $500 into your account, and you'll probably get better results nurturing that small account in options, using very little size and learning and growing, rather than playing the game of that. Those challenge accounts are specifically designed for certain type of traders. It can easily get to the point where you buy so many challenges and you're in the hole, and it adds up. Right, it adds up. So options, in my opinion, are the best way to go. Just treat your options account like a funded account. What I mean by that is the same principles that the funded accounts put on you, the same parameters they put on you. Put those parameters on yourself, but with your own capital. Pay out yourself with your own capital from time to time. I mean, don't drain your whole account because you need it to trade. But time to time, just like a payout, if you have a buffer, pay yourself out. Have strict risk rules, just like a funded account. The same principles from the funded account. Okay, you can apply, you can extract, and say, let me create my own version for my account, and play the same game mentally. After this many trades, this is the buffer I need to take a payout. Same thing. So those accounts are for seasoned traders who know exactly what they need to be doing. For everyone else who's just jumping into the industry, all right, you're going to be $10, $15, $20, $30,000 in the hole before you know it. Because it's so easy to blow up. Okay, it's so easy. And you're not going to take it. The level of seriousness, the issue that I had before when I did it as well, we did it in 2025 with the community, right? It took me a couple of attempts. I passed the account and then eventually just blew the account. Right? It doesn't seem. Of course, if you have the proper discipline, I'm not saying that it can't work. It does work for the people who have the right systems in place. But it's very easy to fall into the trap of just continuously funding. Okay, because of the opportunity cost. Meaning, if you took all that capital you spent on the challenges and you put it into an account, your own account, right, and you just bought individual stocks, or I think we will give you like a 4% return on your cash. Right? You're better off doing that than trying to get some imaginary payout. But for the ones who know how to play the game, who beat the game, who get the payouts consistently, which is a very few group of people, right? They know their edge. So don't start trading those accounts unless you know exactly what you're looking to do. Because it's very easy to be 5K in the hole just from fundeds. Because it's so easy to renew. It's like they're dangling the carrot in front of you, which is a payout, when you literally can create your own funded account. Okay, that's my. There is a way. There is a way to trade it. We have a lot of traders in our group who do a tremendous job and consistently in payouts. But just like anything else, a system needs to be applied. Because what they like to do is they like to tap into your gambling side of your brain. Right? Gambling side. And the fact that you spend $50, $100, it doesn't seem like a lot. So you're willing, for at least I was willing to modify my stops. Because I know I only spend $100 or whatever it is on the entire account. Right? So you don't take it as serious, as opposed to if you take capital, you deploy it into your cash account. You know that if you're trading your cash account or whatever account you do have, if you make money, it's your money. Of course, taxes and all that stuff will be applied. You have to account for that, but it's in your pocket. If you lose, you're losing real money. So the level of reverence, the level of discipline, the level of you rise to the occasion, at least in my opinion. All right? With the funded accounts, unless you're very disciplined, you don't rise to any occasion. There is no occasion to rise to. It's all simulated. But I promise you, okay, if you put your hard-earned money into a cash account, you will be very alert, you'll be very awake, unless you're completely looking to gamble. And if you do make 40%, 50%, you can say, hey, you know what? Let me withdraw half of that. It's yours. But you have to have the same amount of discipline, okay, as if you were trading someone else's capital. Same thing. So that's one thing you can extract. You can extract the rule set that they have, and apply it to yourself. Right? The rule set that they have, and apply it to yourself. Okay, sorry about that. 51st state is covered in snow today as well. Never did it. Okay, take profit, put me in a bad place, to be honest. That usually my eval account is still alive, moving up slowly. Focus is still me, taming down my nerves. Feeling calmer now. Good. Just take the same way we trade the options is the best way, the same way to trade your account. Same principles. If you can keep things the same, That would be very beneficial. But the only issue is, right, it's slow, right? As human beings, with those funded accounts, we put like a timeline on how quickly we want to achieve those things. But if you take it slow, if you take it piece by piece, you have the right approach, you'll eventually get there. Are you trading ES and Q? Are you trading gold? What are you trading? Did you see the percentage of those who passed? Yeah, I saw some. I saw the stats on the funded account, like the amount that buy, the amount that pass, and the amount that get a payout. Let me see if I can pull up those numbers. I did see those numbers a while back. MES, okay, good. All right. Make sure to like the video on YouTube, guys. If you're just jumping in, we already caught a trade into all-time highs. Go back, rewind to basically 1040. Okay, that'll break down that entire trade for you, the rationale behind it, how we manage the position, and we're able to catch it into all-time highs, that initial push into it. Currently, we're going into third shift. If you took any trades in second shift, let us know. I did take one trade in second shift, of course. And so 4 trades so far, all 4 worked in our favor. If you did take any trades, let us know. We'll do the poll here shortly. And let me pull up that stat. JB, let me pull up that stat. I did see that stat a while back. Okay. Okay, the stat is 6% of applicants, each, some firms report. So it's basically what the firms report. So there is no regulation on reporting. So some firms report around 6% of the applicants reach funded status after multi-phase evaluation. Okay, so about 6%. 6% payouts. We can see about 7% of all traders ever receive payouts after challenges and funding trading. So and look at this stat. Very interesting stat. Okay, the average payout tends to be a modest relative to the account size. 4% of the capital invested. So that usually it's 4% of the amount that you paid to buy those accounts. So this is just a stat. So if you're just coming into that industry lackadaisically, you're going to get swallowed. But if you're coming into it, you know where your edge is, you know how to combat these different pitfalls, just like anything else. If you have that a systematic approach, you give yourself the best chance to be part of that 6%. Right, to be part of that 6%. So that means, it's a really good business model. All right, it's a really good business model. The only thing is, to me, it's predatory. All right, so it's too predatory for me to make a majority of my revenue on people failing. All right, or all the revenue on people failing. Because the profit split, depending on the firm, is what? 10%, 20%. So they're not making their money on the profit split. They're making money on the failing. So it is a good business model. Very profitable. All right, just get a bunch of people to trade in a simulator. put parameters around it, charge them to trade in a simulator. It's basically you're paying the paper trade. So what you can do is basically, literally, go to TradingView. Go to TradingView. Log into the TradingView. Okay, let me see if I can do it here. Okay. Go to the paper trading tab on TradingView. Connect. All right. Log into TradingView. All right. Before you do a funded account, log into TradingView. Let's see if we can change the settings. No. There's a way to change the capital. Okay. Okay, let's say. Okay, like you can say practice, or you can say 50K account. You can literally log into TradingView, 50K. All right, before you buy a funded account. Okay, there you go. Boom, 50K. You have a 50K account. Okay, 50K. The same thing that you'll get charged for trading a simulator. Now with this 50K, okay, open up MES or ES or yeah, ES. All right. Okay. With this 50K, try to get this 50K to the 53K. I think it's 53K, 54K, whatever the provider is. Try to pass it here first instead of paying. Okay? Try to pass it here, follow the rules here, and you get to do it for free. Why would you pay $200, $100 to do that? And once you pass it here multiple times, okay, you get that 50K to 53K. Now you know how to get there, and it might even be better just for you to buy an account that's already funded and pay a little extra. So skip the funding part. After you put in after you did it 3 or 4 times. If you can do it 3 to 5 times here, right? Pretty sure you can do it and pass it there. But what happens is the majority of people, majority of traders, they are paying to try because it's so cheap. Anyone can do it. That'll be my recommendation. All right? So you save money. You get the trade. But you put the parameters around it. You try to hit that 53 mark. If you fail the 53 mark, if you blow that account on TradingView, you reset it. You make notes how you blew it, or some of the emotions. You treat it the same way. You treat it the same way, but you'll save yourself a ton of money. So by the time you pass it 3 to 5 times on TradingView via paper trading, when you do go into the funded simulator, you'll be doing the exact same thing. You'll be in their simulator. Or you can opt to say, since I didn't burn a bunch of capital in the challenge phase, I can jump right into an account that's already funded, which costs a little more. So that would be the best way I would recommend for anyone before they start jumping into funded, especially if you're not finding consistency anywhere quite yet. So you're not finding too much consistency in options, you're not finding too much consistency in futures, but you just, hey, you know what, maybe let me just try this futures funding. Trying to get funded as a futures trader. So 9 times out of 10, that inconsistency is going to follow you. Okay? Where you are, there you are. And wherever you go, there you are. You can go to options, you can go to futures, you can go to Forex. Okay, where you are, there you are. If you don't have the framework in place, whatever you're trading is not going to change the result. All right? I'm not saying that to be negative, but it's just the reality of the situation. But if you have a proven framework in place, you've built that level of trust internally within yourself. Right? Now it's just a matter of you adjusting to said platform, you adjusting to said asset class, and finding your stride. But if traders are going to these funded accounts in hopes of finding profitability, right? These firms are like vampires. Okay? That's what they want you to do. So I'm not saying the firms are bad. They do give people an opportunity that maybe can't have an account. But understand the reality. First, at least pass a couple, at least one. Set the amount before you deploy your capital on TradingView. Trade the sessions that you like to trade. Have your setups to trade. Give it a month. It costs nothing. And then when you've done that at least once, then go over, pay one of these firms, and give it a shot. Instead of just jumping in, okay, not knowing what's going to happen, not knowing what sessions to trade. Okay. I use to test strategies 100%. Ever since I tricked my nervous system into feeling I'm using real money, I noticed a major improvement in risk management, but I also should have started in paper trading first. Always making that improvement. The trading journey, guys, when you become a trader, it's a journey. And again, there's no one way. There's no one way for us to learn. We're all going to have to pay tuition at some point in time. And our tuition is through our losses, okay? We pay tuition through losses. We're not classically trained. All right, so it's not like you can go to a four-year university to learn how to trade. Put it like this. If you can go to a four-year university and there was a program to learn how to trade, learn how to scalp, okay, it will be the most expensive program because it's a skill that's practical. Okay? If they're selling you a history degree, okay, history degree. I mean, nothing wrong with history majors, okay? Just give an idea. Like the soft science degrees. If you're not looking to take it to the next level, all right, a lot of the soft science degrees, if they're selling you the soft science degree, all right, even if you consider the soft science for $100,000, okay, for $100,000, 100K, guys, that's the rate. All right. Plus, you got to spend 4 years. Plus 4 years of your life. All right. If they're selling you this degree for 100K, 4 years, if they were going to, and this doesn't really apply to anything specific. It's you have to take this degree and apply it to maybe you want to be a pre-law major, whatever it is, so on and so forth. But in a vacuum, you're just learning about history. You're just learning facts. You can't take those facts and make money on the marketplace, right? I can be a master of, maybe now you can maybe turn into like some sort of, if you're creative, you can turn into content, right? If you're really creative. But outside of that, there's very little things you can do with one of these degrees. If they said, hey, you know what, we can turn you into a scalper. We can turn you into a scalper. Okay? Can turn into a scalper. This is practically applicable. All right? Practically applicable. Do you think that they're going to sell you this at the same rate that they're going to sell you this, which is very general? this is going to be north of $500,000. All right? Easily. Because this, you can do this while you're a student. You can apply it while you're a student. This is self-sufficient. This, you can do many, many, many things with it. Right? So there is no institution for us to classically be trained. So our tuition as traders is we learn through the losses. That's our tuition. We learn through the losses. And it's only tuition if you're learning. If you're not learning, if you're not making the adjustment, sometimes you got to take that course once again. Okay, you're not going to graduate. All right? You're not going to graduate. So think of it like this. If I'm taking a risk management course in trading and I blew through 3 accounts, I fund another account, I get more capital, I put money in the account, I'm making the same mistakes, that means I failed risk management 101 3 times. Am I a good student? Am I a good student if I failed risk management 101 3 times? Or is it, hey, you know what? I blew 1 account. So I learned so many things during that time. I just completed risk management 101. Now I know what to do, okay, because I paid that tuition. I'm better at assessing, managing, and defining risk. So we're not classically trained. We're learning on the job. So there's going to be some things we have to pay for, okay, that we didn't account for, but that's just part of our journey, right? Again, they're telling you these type of degrees, guys, which is, to me, a lot of it is, unless you're leveraging this into something else, is complete nonsense. Okay? It's a complete trap. All right? And that's where they're funneling a lot of the people into these majors, because it's free money for them. It's free money. All right? So same thing. Okay? Same thing. So if you're going to spend money learning trading, there's no ifs, ands, or buts. But the way you spend is through your losses. Can you take courses? Yes, you're going to take courses. Is the course going to instantly take you to a level of proficiency overnight? No, it's not. It's just one piece of the puzzle. It's one piece of the puzzle. So as long as you're constantly learning, you're doing well, meaning you're learning, you're applying the information, and you're being studious, eventually you will graduate. Meaning you'll be at break even. Maybe you'll start seeing some green. But most people, they don't want to put the 4 years. They want to graduate in 3 months. It doesn't matter how much of a genius you are. You can't go to Harvard and say, hey, let me graduate in 3 months. Okay? You can't. Unless you get an honorary degree. Okay? You can't graduate within 3 months. So I say that to say that it's going to take time, it's going to take effort, it's going to take sacrifice, it's going to take the allocation of resources, the loss of resources, but at the end of the day, it's an investment in yourself. Because once you have that understanding, okay, you can make incremental steps towards self-sufficiency. You're not going to become self-sufficient overnight. Okay? I'm not going to say that. You can make incremental steps. Maybe now, hey, you know what? You're matching a quarter of your salary. You're matching 10% of your salary, 20% of your salary. You're matching. And now, over the years, you're doing half of your salary. Right? That's the kind of mindset you want to have. And eventually, it will be one-to-one. If it's one-to-one, who gets to dictate what they want to do? You have the upper hand. The doors are open. Do you want to continue to go down that field? Or do you want to go down a different field? You get to choose. Okay? But it's not you get to choose, you get to call your shots overnight in 3 months. Right? It takes 3 to 5 years. Just like a degree. All right. Most people, it takes 3 to 5 years. Can some people get it done in a year? There's exceptions to the rule, but everyone can't be the exception. All right. It has no one. It's not an indictment on your intelligence, right? But it's just a fact. All right. So just treat it the same way. Give yourself some time. All right. You're literally trying to get your bachelor's in trading, but you want to do it in 3 months. I paid my tuition much so that I'm over-certified. I often say I understand quickly, but you have to repeat often. Yeah, some of us have a PhD in or a postdoc in risk management. Emotions are the hardest part to get control of. Still learning 100%. And the better you can manage the emotions, you start getting better over time, ERA, but they're not going to go away. The emotions are not going to go away. So we just have to embrace the emotions, and the emotions are actually there as a defense mechanism, believe it or not. So your job shouldn't be to remove the emotions and become cold, right? That's asking to do something that's not within your nature. Your job becomes, how do you channel the emotions? Or where do you channel those emotions? That's what it becomes. One of the things I do when I feel FOMO is it's not like I don't feel FOMO. I'm a human being. I feel FOMO all the time. But I literally take the FOMO energy and say, okay, let me use that FOMO energy to really be sharp and find another setup. Right? It's better to do that than try to chase, because I know what it means to chase. So hence what took place here. There's a ton of FOMO here, right? So it's okay. You know what? All right. So I have FOMO. I'm feeling FOMO. What do I do? Do I chase? No. I have to wait. So the best thing I can think of is a shallow area to get involved for a nice little potential break. I define the risk, allocate the risk. Was I able to squeeze something out of the trade? Yes. Was I directionally wrong at the time? Yes. But even if I didn't take those profits and I got stopped out here, 15, 20%, I'm okay with that, right? Rather than building the behavior of chasing. Because it looks like, it simply looks like if you just chased, you would have got rewarded. That's what when you look at the chart, it always looks like if you chase, you get rewarded. For some reason, when you look at the chart, it looks like if you chase, you would have got paid. I promise you, as soon as you start chasing, right, you're going to quickly find out, why is this happening to me? All right, so think of it like that, guys. It's just tuition we're paying. We're paying tuition, and eventually, I mean, just go back to the degree analogy. All right, you pay $100,000 for a degree, regardless of what it is. You're $100,000 in the hole. Now you got to go. Okay, you got to go. You got to leave the institution. You got to go to the marketplace and say, hello. Hello, company. Hello, individual. I have this skill. Where can it fit in your institution? Where can it fit? Okay, the person says, okay, yeah, it fits here. It fits right here. We're going to fit you right there. Okay. But guess what? You're not starting at zero. You're starting here. Unless your tuition was covered, right? Unless you have a scholarship, of course. You're starting minus 100. So you learned all this, and you're now getting to do the thing you're trained to do in the negative. And the rate that you're getting paid maybe is 65 to 75% at best for majority of people. So maybe you're getting paid 65, 75,000. I think that's the average salary for college graduate. So you have to apply it, but you're still in the hole. Same thing with trading. After you pay your tuition and those losses, after you lose, you're not going to start at break even. You're going to have to crawl yourself out systematically from everything you learned. Right? But don't look at it from the standpoint of, hey, you know what? I got to pay this. I owe $100,000 in a school debt. I got to pay it with my first salary. No. There's a small plan in place for you to pay it off. Same thing with trading. You're incrementally, if you're in a big hole, you're incrementally digging yourself out of that hole with a new capital injection. Not trying to get one trade to pay everything. Not trying to get one paycheck, right, to say, hey, you know what, let me pay all my debt off. Because you can't make that in a year. Right? The skill set you learned here, it doesn't garner that much. So say if you're a 50K in the hole in options trading, or 50K in the hole in futures trading, and now you built a few accounts back up, but bigger picture, you're in the hole. All right, with this newfound identity, with the new account that you're trading, say if it's a new month, it's a new year, whatever it is, you're not looking to have this 1 month to pay to cover everything that you lost. It's you're gradually getting there. Right? You're gradually getting there. That was the cost of the tuition. And these are the things that most people don't want to talk about, but that's the reality. Okay? Okay, that is the reality. So same thing. All right, so the whole industry becomes, hey, you know what? Let's sell you this dream, this $100,000, whatever it is, whatever your number is, in 3 weeks. 3 weeks. You trade with us, you click a couple of buttons, you manage risk, I'll give you this in 3 weeks. Okay, so now ask yourself, what are the odds? Right? Is this gambling, or is it really an opportunity? If it's really an opportunity, right? It's a very narrow path. You have to be part of the 3 to 5%. So what that means is for you even to get to pass, to get the payout consistently, you have to be part of the 3 to 5%. So the question becomes, what are the 3 to 5% doing? Because the 95% are playing the game. They fell for it. And it's okay to get got sometimes. I've gotten got many times. All right? It's okay. We all got to be a sucker sometimes. But you can't stay a sucker forever. Okay? You can't stay a sucker forever. Okay? Anyways, guys, we're about to reach 12 o'clock. Make sure to like the video. Make sure to subscribe. What blows my mind is your wisdom. You have almost half my age. Thank you. Have a blessed day, everyone. I'm grateful for $215 today. Beautiful job. Good. If you're just jumping on YouTube, you probably caught that part of the rant, but we primarily do trade. We already took 4 trades. All trades worked in our favor. Make sure to subscribe. If you have any questions, put your question in the chat. Any chart request, put it in there. And some things have to be said, guys. Something have to be said. And that's the reality of trading. That's the reality of trading. So you need to be learning. You need to be in the right type of community. You need to be other traders who are dedicated to the craft, who are focused on process, and who are playing the long game. Right? So that's basically what the community that I'm building, that we have, and that we're cultivating. If you're interested in that, make sure to click the links in the description to join. So we're back at that prior all-time high zone. See if we can bounce off of it. I have no interest in clicking buttons today. Tomorrow we have FOMC. So FOMC, we will be taking some trades at that time. So we'll look to take advantage of some trades there. So I didn't put a poll question. Let me put up a poll question real quick. As far as strikers, how we doing? Okay, daily. Okay. Green, red, yellow. How are we doing, strikers, if you're logging off? If you're green, stay clean. It's 12 o'clock, midday. Okay, what pattern is this team? Strikers, what pattern is this? Folks on YouTube, what pattern is this? So we talked about it earlier. Okay. This is, all right, it's getting tight. And it starts to break. So look what's happening. Right, it's getting tight. It gets tighter and tighter and tighter, and eventually starts to crack. Support cracks. Now we grab those second shift highs. Yeah. Second shift high grab, trap. Now we're back at that all-time highville. All right, all-time highville. Okay, we're at all-time highville. Okay, let me vote as well. Are we at 100% green today, guys? 100% green. Awesome job, guys. Some of the things you guys are doing is phenomenal. First Veil, I passed in 5 days, pure luck. Then I was 600 away from a payout. Reset city after that. That's how they got me. Yeah, the emotions of the getting to the payout and putting that pressure and things speeding up. Right. And if you stick to it, I'm confident that you'll get it done. Tujin. If you stick to it, you apply the proper principles, and if it means something to you, you take it slow, and you understand what kind of game it is, and you play the game the right way. It's a matter of when, not if. All right, I'm confident you can get it done. Right, but just draw the line personally, right? Draw the line personally, because it's so easy to reset the accounts. So easy to just reset. If you just blow up, reset to go to another vendor, right? So easy to do those things. So just draw the line. Say, hey, you know what? I have this much capital to invest, X, Y, Z. Okay. So seven votes, all green. Tremendous job, guys. Tomorrow, the party starts tomorrow. The party starts tomorrow. Party starts tomorrow. So tomorrow, make sure to turn your notifications on. We're going to have the FOMC rate decision. We're also going to do some FOMC lottos. We've been doing it for the past 3 or 4 meetings. Same thing. The last meeting, we were able to catch some nice trades. If you don't trade FOMC, don't trade FOMC. Just think of FOMC as lotto hour. If you have some profits to utilize, I wouldn't recommend going full port on FOMC. Okay, but it's just to show you the power of FOMC, of those contracts, and how 1, 2, 3, 4, 5 contracts at a time can really have an impact and really play out nicely. I believe the last FOMC we took 3 trades, I believe, 2 or 3 trades, and it played out to a T. And the risk has to be wider with the FOMC. You can't use the traditional 10-15% risk. The risk is the amount of capital you deploy. So FOMC, the risk is the capital deployed, not so much the percentage of what the amount of the contract. All right, because the nature of FOMC is so volatile. Right, since it's so volatile, I think it's in 2025. Okay, let's go back to 25. 2025. Okay, here we go. Does anyone recall the FOMC meeting, the last FOMC meeting? Let's go. We have everything, guys. So keep in mind, I have this exact same layout for 23, 22, 21, 20. Okay? So I have all these layouts just like this, price action on SPY, every single day. Okay, 2 years are available here. Let me see what that last FOMC meeting was. I'm keep a close eye on SPY. Okay. Slow grind. Bullish chop. If I just Google it real quick, I can probably find it. But let's see. Seems like we're getting close. I believe it was the beginning of December. First week of December. Okay, poised to reopen. The government shut down. That was wild. Okay, let me just Google it and come back to it. So when was the last FOMC? Okay, when was the last FOMC? The last FOMC meeting was December 9th and 10th. December 9th and 10th. So obviously we're getting a breakdown below that prior all-time highs. We grabbed those first shift, second shift highs. There's a textbook setup, SAT setup. We're looking to go short after we grab those highs. Higher risk, higher reward type of setup. Reason why it's higher risk, you're going against the grain. Reason why it's higher reward is because of the risk reward, right? The fact that you're going short at the very top, those contracts are the cheapest of the day. Those puts, you get a nice little drop to the downside. This is easily up nicely, but every point, every candle, we're seeing some contention and some buyers trying to push it on every candle. So, which means the action is not as clean as we want. So let me go to December 9th and 10th to see what the action was. December 8th, okay, at Fed decision. So this was the day before, okay? This was the day before, okay? The day before the decision. That day we took the I think we took one trade. We took the retrace reject right here for that breakdown. Played out beautifully. And this is the day of. The day of was here. Boom. Okay, this is the day of. All right. Let me make sure. Here it is. Actually, this is the day of. Okay, here we go. So here we go. So initially we took the puts here. We took the puts there as well. I believe we got like 70, 80%, maybe even 100% plus. I don't recall exactly. But the profile was we grabbed prior shift highs, psychological level rejection. We played that. If we took the bounce here, that bounce played out beautifully as well. So go back and watch that episode actually to get the exact trades. That is December 10th. Okay, December 10th episode. Go back and watch it. All right, so I say that to say we're going to take some trades on FOMC. It is high risk. It is considered like a lotto. We're going to do our regular trades. Before that, of course, look for our 3 to 5 setups. Once we do get those trades, once we do get those setups out of the way, we'll hang around for a little bit and we'll start taking some 1 or 2 trades during FOMC. All right, if you don't trade FOMC, again, sit back, relax, enjoy. I don't want you to full port by any means during FOMC. It is a high risk event. Some traders classify it as a no trade day because of the volatility. But for us, since we're scalpers, there will be opportunities every day. If you're a scalper, there is no day, no trade day. Unless you personally choose, there isn't a day when we can't trade. Okay? Unless the market is open, unless it's a personal choice. As a scalper, guys, you want to get to the point where no matter what the market throws at you, okay, you can go to work. All right? Unless you decide to take a day off. No matter what SPY throws at us, I promise you, we'll have something to take advantage of. Is it going to work in our favor all the time? Look at that nice little spike there. Not necessarily. It's high win rate, but it's not 100% win rate. But there's going to be something for us to do. Okay, so we'll take care of our business during the first 2 hours. We'll hang out. We'll provide coverage. Right now we're leaning towards no cut. no cut, and then look at that complete breakdown. If we break below these lows, continue to push back the downside, where price is probably seeking that VWAP, right? If we can stay below that prior all-time highville, right, we're probably going to go seek the VWAP all the way down there. We'll see what does take place. Any questions, guys? Any questions? We'll look to wrap up the stream soon. Okay, we'll look to wrap up the stream. Done for the day. Thanks again for today's session. Absolutely, Najandra. For those of you who've been in the Discord for a while, guys, make sure to leave a review. Leave a review. Okay. Leave a review, leave a testimonial. We did have a handful of names report earnings. We'll probably wrap up the stream a little early. Okay, I do have the kiddos with me, so we got to go hang out for a little bit. Okay, so the kind of school that they go to is you go to school for a certain amount of time, and then you have 3 weeks, 2-3 weeks off. All right, so there's no summer break. So instead of having that large summer break, they have weeks off in between. Right, weeks off in between. All right, so we did our job today. Phenomenal job, guys. Keep answering the poll question, again, completely voluntary. And please don't try to take trades so you can answer green. Just live with the results you may have. And if we're at 88% today, that's fantastic. If you are red, tomorrow there'll be opportunities. I made our gargantuan mistake yesterday. I spent like $13 in 10 puts that I thought were one-day DTs, but they were zeros, and they expired at the end of the day. Oh yeah. I went to physical therapy at lunch and didn't check them because I thought it was the next day. Yeah, sometimes those happen, but at least it was not too much size. It was not too much size. As often FOMC is there. It's erratic move. Thank you, George, as always. Absolutely, guys. Absolutely. Tomorrow's a big day. Tomorrow's a big day. If you're done, be done, guys. We can start chopping around for the remainder of the day. We already made all-time highs. All right, so this is our way to catch all-time highs. So we can at least say we have something to show for the push into ATH. All right, we have something to show into that initial push into ATH. So if you took that trade with me, if that lined up with the things you look for, all right, you can officially say you traded SPY into all-time highs, and you were probably one of the first group of participants. All right, so you were in a good position to catch it. You were part of that first wave into it. So not this push, not this push, not this push. Look how messy it is up there. Okay, and now we're starting to slide back to the downside, potentially seeking that VWAP. So if you're done, be done. I'm done. I'm looking to just wrap up. Any questions, let me know. You guys did tremendous as always. Okay, And the main thing is for folks on YouTube, there's no signals here. What you'll notice, there's no signals. Is the training to help you be the best trader you can be. I cannot trade for you. I cannot click buttons for you. We all have different ways we view risk. We all have different account sizes. We're all in different circumstances. So all these things are different, but the one thing that unifies us is our end goal, is the end goal, right? So beautiful job, 600 or 600 away, okay? All right, so there's a community you definitely want to be in. All right, we'll go over how to join the community. Look at that storm. This reminds me of Toronto. This reminds me of Toronto. Tremendous job. Tremendous job, Kevin, as well. I like how you're tracking everything. I love the TPs. Okay, I love the TPs scaling out. Look at that, guys. And it adds up. So tremendous job. JB with the Pattern recognition as always. 63%, 32%, 40% one on our left. This is the one that I missed. And look at this, 2.2% on the account, right, on the entire portfolio. Kevin gave us the heads up. Apple, okay, good. Okay. All right, nice little drop. So if you're looking for that break, you get the breakdown here. You have the SAT entry here, the best seat in the house. Is it the cleanest action? No. Is it taking forever to break down? Yes. But again, FOMC tomorrow. Have a great day, Alan, as well. So we'll be logging off here in the next 15 minutes or so. Okay. And we'll be back to do it again tomorrow. Okay, I'm new to your community. I just want to know a little more about your channel. Are you online every day from the market open to close? Do you announce entry exit? So hello. I'm not sure how to pronounce your name, so we'll just go with 7640. So yes, we are live every single day. Live every single day from 9:30 a.m. Eastern, typically to 1 o'clock, 1 o'clock p.m. Eastern. Sometimes we go all day, sometimes we don't. Tomorrow we will be going all day because of FOMC. We'll have the coverage of the rates of the interest rate decision. 99% chance nothing happens, but still the market will have a reaction. Second part of your question was, do you announce your entry exit? I share my ideas, but keep in mind on YouTube there's a delay, and these ideas are not alerts. They're things I'm doing. It's not things you should be doing. It's things I'm doing. All right, so I do say where I'm going to enter, where I'm going to exit. All right, just to first things first, I do walk through the setup. So I give the rationale. More than the entry and the exit, what you should be taking away is the rationale, the why. So I do provide the rationale. New to your community, want to know, okay. So yeah, so again, if you guys are interested in joining, take advantage of the trial. Price increase will be coming. Okay, we're going to price this thing at true value. If you're in the community, I did make the promise early. Whatever price you pay is a price you pay forever. All right, so some of you pay different prices. That's absolutely fine. You're grandfathered in no matter what happens. So you have no worries with the price, even if you're on the yearly tier. If there's an increase, all right, if there's an increase, it's not going to impact your price. You're locked in. Okay, you're locked in. It's a nice little break from here to here. So we're basically kind of pushing back the downside. Nice little break. So again, take a screenshot of all this. So tomorrow during the breakdown in the morning, we're going to talk about how this played out. So you notice, what you'll notice is most traders, okay, they don't have in their routine to go over what took place the previous day. The reason why I go over the previous day, right, is not because the same thing is going to happen. That's not what I'm looking to do or replicate. Is to get a good read of how price interacted with those levels, right? And now when I have the read for Monday, Tuesday, Wednesday, Thursday, by the time we're midweek, I usually have a rolling idea the past 3 to 5 days how prices interact with certain levels, how the algos are interacting with certain levels. That's why I do it. And it gives me context on where we are. Right? So, and it also helps you drill. It also helps you drill. Okay, you're drilling. You're following a technique. It also helps you drill the things you look for. And you'll be surprised how much of a difference a small thing like going over the entire day. All right? To be honest, there's no reason for me to go over the entire day. I can easily say, hey, you know what? I don't need to go over the entire day. I know what to look for every single day. But I submitted myself to the process. Right? I'm process first. So I always go to process because I know the process is the backbone of everything I do. look at that bounce. Look at that bounce off first shift highs. Nice little bounce. That same area where we got the calls earlier continues to go. So they dump it all the way here. Okay, no surprise. All right, so if you're interested in joining, make sure to go to smartactiontrade.com, smartactiontrade.com. All the links are pinned in the description. We have QR codes on the screen you can scan. Use the code WHOP, 25% off. Think of it as a trial as I migrate to WAP. Okay, go to the community tab. There's two ways to join. There's the light version of the Discord. You have access to all the technical features, all the educational material, but you don't have access to the video, ad-free, delay-free video stream. I share my screen. You can see everything going on in real time. I have another separate chart in the left corner where I provide the idea, just to give you more of that immersive educational experience. And you also have access to the pre-market prep stream. So this is the way to go. Take advantage of it. Use the code WHOP. If you're looking to lock in for the year, all right, absolute steal. This is the cost of 3 contracts. 3 0 DTE at the money contracts is what this will cost. All right, so if you've been tuning in for some time, you trade more than 10 contracts, you find value from the material, you've taken one of the ideas and it's worked for you, right? You already covered your cost. All right, so this shouldn't be an issue at all. This is a very low hurdle to get over. All right, once you're in, you get access to all the tools, all the resources, all the educational material, the live trading, and one thing I can never quantify is the quality of traders you get to be around. And that's what I'm looking to protect at all times, that the essence of our community. All right, I don't want to dilute the essence of our community. All right, so again, take advantage. If you're interested in getting educated. All right, boot camp, that's available. January 31st. We're running it back one more time. Self-paced course, $69. Absolute steal. All right, 5-hour course. Okay, this course, if you really take it, if you really apply everything you learn from this can be foundational in your learning, and this would be a critical building block. You're going to have to put in 5 hours. You can't tell me you want to learn how to trade and not dedicate 5 hours. Okay, so I dedicated 5 hours making the video. You need to dedicate at least 5 hours watching the video. So that's how the information gets transferred. All right, and then the median is the course material. So I'm taking what I know and putting it in your head. Okay, so the median is the material, but you're gonna have to dedicate 5 hours to digest the information, to watch it, to look at, to go over the content, and to really soak it in. Whether you're a beginner, it's beginner friendly, it's intermediate friendly, it's advanced friendly. Right? For the advanced traders, the primary areas you want to pay close attention to is your fundamental understanding of market structure, trends, support, and resistance. Right? Your understanding might have some holes in it. Even 3A plus setups are there as well. So each of the boot camps, what you'll notice is each of the boot camps, I share 3 different A plus setups. I did 3 boot camps already. If you attended all 3 of them, if you're an alumni, you can attend the next one. All right, if you attend all 3 of them, you'll notice all 3 of them as 3 different setups. All right, so there's not a shortage of setups that I have. Okay, there's not a shortage. We have enough setups. All right, so take advantage of the course. Sign up for the boot camp if you're looking to lock in. Okay, ebook, that's all included. If you are in the community, the premium monthly plan includes the 5-hour course. This is included in your plan. As of December, this is included in your plan. So what you need to go to is here. All right, self-paced course, that's available to you. Or right here when you join. For the ones who did join recently, okay, go to trading course. Boom, right here. Okay, the PDF version is also available. All right, send me a message. I'll send you the PDF version. This is what it goes over. So this is included in your plan. So this is my attempt at structured education for traders. Right, there's only, I would argue, when you're learning how to trade, right? 30% of it is structured, 70% of it is in the field, right? 70% of it is internship, right? So you have the structured 5-hour course and basically the live trading, mentorship, the guidance is the internship. So you get right into it. All right? So if you want to join, that's how you take advantage. That's how you join. Use the code WHOP. Take advantage before the price increase. Free tier is also available. Free tier Discord is also available. If you took this, you earned this, you deserve this, because while you sat, you have to be so patient. But you can see, came with that daily upside target. Last time we came here, 41%, comes back into it. Nice push back to the upside. So let the selling take place. Okay? Let the bears eat. Okay, let the bears get fed. Once they get full, it's your time to get fed. Don't be too greedy. Okay, don't be too greedy, because now once you get full, you don't want to continue to eat because there's no more food left. Okay, so now there's an area where we can see maybe some pushback. If we blast past this with minimal hesitation, that would be impressive. That's an impressive bounce. That might be the cleanest move of the day, or one of the cleanest moves of the day. Okay. In the shortest period of time. This move is very similar to here. How much ground did we cover in that short period of time? ATR, atrocious. IV, atrocious. If you're done, be done, guys. I'm done. And we'll wrap up in the next couple minutes here. If you're a first-time viewer, make sure you're subscribed. Make sure you join the free tier community. Long-time viewers, the one who've been watching for more than 3 to 5 episodes, take the next steps. Join our community. Immerse yourself with the resources, the tools, and the people. All right, the people. All right, other traders that provide tons of value. We hold each other accountable. We look out for one another. We share ideas. All right. And we really apply the team sport element to this individual game. I know we're all taking trades individually, but we try to make it as team-oriented as possible. That was a nice little pop back to the upside. Have a great day. Anyone else logging off, have a great day. So you can see, folks on YouTube, 89% of our traders, 89% of our traders are green. All right. And I didn't tell anyone to buy anything, sell anything. I didn't tell anyone to get calls here, get puts here. All right. So they earned every piece of that 89%. Every piece of that 89%. Every piece of that 89%. I'm going to drop the link to tomorrow's stream in the chat. So what you can do is turn the notification on. Okay, and get ready for tomorrow. Okay, let me make it public. And this is the link for tomorrow's stream. All right. If you missed today's stream, make sure to attend tomorrow and be in position to take advantage. No, I'm currently not in a trade. So I already took four trades. I took 4 trades already. Here, 13%, 11%, 15%, and 41%. So there's the link to tomorrow's stream. So as soon as we log off, make sure to click that link and turn your notification on. And be there early in the morning if you missed today's stream, if you're just jumping in. All right, most of our work gets done between 9:30 and 11:30. All right, we try to be as precise, as focused, as engaged as possible during these 2 hours. Most of the time when I am trading past 11:30, basically I'm on cleanup duty, right? I'm working overtime, meaning maybe I made a couple of miscalculations in certain areas, and maybe I'm trying to get back as close as possible to break even after getting stopped out. But if I'm green during the first 2 shifts, right, shutting it down. All right, so usually 3 to 5 trades. I would say 85% of the trades take place between 10:30 to 11:30. Sometimes we do take trades later on as well, if the setup is there, high quality. There's a link to tomorrow's stream. Make sure to click onto it, set the reminder, and join us tomorrow. 4 out of 5 green done for the day. Yeah, contracts are not moving. So before we wrap up, someone put in the chat, okay, why are the contracts not moving? Why are the contracts not moving? We've covered this before, but you're noticing the underlying. Okay, you're noticing the underlying. Keep in mind, this is your contract. Your contract is tied to the underlying. Okay, the underlying is SPY. SPY is moving. Okay, but your contracts are barely moving. Right? And other days, okay, so in other times, SPY's not moving. Okay, let's do this. Okay, I want to draw some parallels. I want to show you the difference. SPY is not moving as much. It's always moving. It's not moving as much. Okay, but the contracts are moving more. Okay, and most of you should already know this, right? This has to do with IV. If you take a look at the contracts IV, the implied volatility, look at the VIX, look at the IV. When the implied volatility is very low, those contracts barely move. All right. On top of that, so this is IV. Think of this part. This is the IV variable. IV's here. Okay, the IV is impacting the contracts. Okay. From the underlying perspective, what's impacting the underlying, all right, is the ATR. Okay, so visually it looks like price is moving, but you don't even know how much price is moving, so the ATR. So in this case, when it's low IV, okay, so when it's low IV, low ATR, okay, these are the worst conditions to trade. Means when you're deploying your capital, right, you're not giving yourself the best chance to win. You can be right on the chart, but you can be wrong in many other ways. When it's high IV, all right, above 20, low ATR, what happens is the contracts are moving aggressively even though the underlying is not moving a lot. So this is going to favor scalps. If you're looking for an expansive move, right, You're going to see green, you're going to see red very quickly. In the case where the IV's high, relatively high, not too high, and the ATR is high, this is expansion. So that's when you're right, you're very right. Minimal interruption. Okay? So very important for us to understand that. That's one of the first things we pay attention to. Environmental conditions. All right? So that's why we use the 60 ATR, 20 IV as our threshold, that window. Right? And these are relative levels. When I say relative, 30 IV can be low if for the past 5 days our IV has been 70. 70 IV can be high if the past 5 days our IV was 30. 15 IV can be low if the past 5 days our IV was 20. So all these things are relative. Right? They're relative. And you're comparing them to prior conditions, and you can compare them to something known as the HV, which is a historical volatility. So that's why. So when you think of the options contract, all right, we're using, think of it like this. Okay, we'll go one step further, and we'll wrap up. We have the underlying. Okay. We have SPY. SPY is doing its thing. We are not trading SPY. We are not trading SPY. We're trading something known as a derivative. We're trading something known as the contracts, SPY contracts, that are a derivative of SPY. They're based on SPY, but they're not SPY. If we were trading SPY itself, right, we don't have to worry about IV. We don't have to worry about all those other variables. So we are, as you and I, as the trader, keep in mind, we are using SPY. We're looking at SPY, finding opportunities on SPY, okay, to justify areas where we can buy these contracts. And these contracts go up and down. As SPY goes up and down. The degree of which these contracts go up and down are based on, of course, the underlying, okay, and their own variables. They have their own set of variables that make them go up and down. If that makes sense. So you and I, we're using SPY to trade these contracts. So we're looking for opportunities on SPY, on the chart, to allocate risk, define risk, that will justify some movement on the contract. The contract's value is not based on the contract itself. The contract's value is twofold. It's a mix of the underlying and a mix of some internal variables, but primarily being the underlying. So think of it like 80% underlying, 20% internal variables. Greeks, IV, so on and so forth. So one trader might say, hey, you know what, George, since we're trading the contracts, why don't we keep our eye here? Okay. One can pose a question and say, since we're trading the contracts, why do I have to look here? Okay. And I will answer that by saying, we're trading the derivative of something. This is tied to this. Right? This is a spin-off of this. This is a spin-off of this. So even if we just decide to trade this, okay, we just remove this and trade this in a vacuum and draw our levels. Can we do it from a technical standpoint? Yes. but you're not taking into account what's making this move. This, the underlying. The underlying. So guess what? Let's take it one step further. This is option. This is basically options trading in a nutshell. This is basically a framework, option trading in a nutshell. Now, let's take it a step further. In the coming years, in the next 3 to 5 years, the predictive markets come into play. As the predictive markets come into play, what's going to be the predictive markets mechanics? The mechanics of the predictive markets. Because the predictive markets, okay, this is what I'm trying to solve in the background. The predictive markets, okay, the mechanics have to be based on this guy here, underlying. And guess what? There's going to be a predictive market tied to the underlying, which we already see. And guess what? There's going to be predictive markets tied to the derivative. So think of like a derivative of a derivative. So now we're seeing predictive markets tied to the underlying, okay, and creating its own ecosystem. Soon we're going to see, it's like sideline bets. We're going to see predictive markets tied to the contract itself. What are the chances of this contract closing in the money? That's a simple thing I can think of. And then on top of that, we're going to have sideline bets on the sideline. It's going to be wild, guys. So we're not there yet. So 2030, think of 2030 operating in this space here. This is coming up. They're just trying to figure out the mechanics on how things work. All right, this is a preview of 2020, going to 2030, the new era. Right? Currently, this is where we operate. This is options trading in a nutshell. Okay, that is options trading in a nutshell. Okay, so that's why you're going to focus on the underlying. Okay, and then from the underlying, look to take those contracts. Okay, so hopefully that provided value on IV, on how options work. And if you can understand that, you'll do great. And where does this go to? This goes to all the way here. Randomly stops. I say that jokingly. Okay, and then it comes back here. All right. Any questions, guys? If not, we'll look to wrap it up here in a couple minutes. Again, thank you for tuning in. Hopefully you found value from the stream. Tomorrow we have a jam-packed day. Earnings calendar for today. What companies do we have reporting after the close? Okay, we got Microsoft. No, we got Texas Instruments. Texas Instruments, PPG, Stride. We got UPS, GM report, RTX, American Airlines. So tomorrow, before we kick things off, GD will report, Starbucks will report, Progressive, ADP, ASML, that's a name to watch. And then after the close, after FOMC, we have 3 of the top 10 companies in the NASDAQ reporting in QQQ. 3 of the top 10. 30% right there. Okay? In the next 48 hours, we will have 4 of the top 10. Okay? 4 of the top 10. And maybe 6 of the top 20 for SPY. 6 of the top 20, because Visa, MasterCard are up there. They're in the top 20. Okay? On that note, again, guys, if you're still trading, if you're still in the trenches, manage accordingly. If you're done, be done. Get prepped for tomorrow. Thank you for tuning in. We'll see you guys tomorrow. Have a great rest of your day. Stay safe, and God bless each one of you.
Tired of wasting hours staring at charts, over-analyzing trades, and still ending the day with inconsistent results? You're not alone. That's exactly why the SPY Strikers Trading Mentorship Discord community was created. Here, you can trade just one ticker for 1 hour and make strides towards consistent results. Join the SPY Strikers community and get daily live trading, clear pre-market game plans with key levels and high probability buy and sell zones, over 4 hours of delay-free, ad-free live trading and training, plus high win rate trade alerts, automated technicals that simplify charts, and full access to my strategies and indicators. This isn't a signal service. It's a community focused on process over profits, giving you all the resources, guidance, and training to help you succeed. You'll also get a full watch list, 1,500 plus hours of live trading videos, courses, an educational library, ebooks, and dedicated support. Stop guessing. Start trading with confidence. Become a SPY striker today, and take your trading to the next level. Tired of wasting hours staring at charts, over-analyzing trades, and still ending the day with inconsistent results? You're not alone. That's exactly why the SPY Strikers Trading Mentorship Discord community was created. Here, you can trade just one ticker for 1 hour and make strides towards consistent results. Join the SPY Strikers community and get daily live trading, clear pre-market game plans with key levels and high probability buy and sell zones, over 4 hours of delay-free, ad-free live trading and training, plus high win rate trade alerts, automated technicals that simplify charts, and full access to my strategies and indicators. This isn't a signal service. It's a community focused on process over profits, giving you all the resources, guidance, and training to help you succeed. You'll also get a full watch list, 1,500 plus hours of live trading videos, courses, an educational library, ebooks, and dedicated support. Stop guessing. Start trading with confidence. Become a SPY striker today, and take your trading to the next level. Tired of wasting hours staring at charts, over-analyzing trades, and still ending the day with inconsistent results? You're not alone. That's exactly why the SPY Strikers Trading Mentorship Discord community was created. Here, you can trade just one ticker for 1 hour and make strides towards consistent results. Join the SPY Strikers community and get daily live trading, clear pre-market game plans with key levels and high probability buy and sell zones, over 4 hours of delay-free, ad-free live trading and training, plus high win rate trade alerts, automated technicals that simplify charts, and full access to my strategies and indicators. This isn't a signal service. It's a community focused on process over profits, giving you all the resources, guidance, and training to help you succeed. You'll also get a full watch list, 1,500 plus hours of live trading videos, courses, an educational library, ebooks, and dedicated support. Stop guessing. Start trading with confidence. Become a SPY striker today, and take your trading to the next level. Tired of wasting hours staring at charts, over-analyzing trades, and still ending the day with inconsistent results? You're not alone. That's exactly why the SPY Strikers Trading Mentorship Discord community was created. Here, you can trade just one ticker for 1 hour and make strides towards consistent results. Join the SPY Strikers community and get daily live trading, clear pre-market game plans with key levels and high probability buy and sell zones, over 4 hours of delay-free, ad-free live trading and training, plus high win rate trade alerts, automated technicals that simplify charts, and full access to my strategies and indicators. This isn't a signal service. It's a community focused on process over profits, giving you all the resources, guidance, and training to help you succeed. You'll also get a full watch list, 1,500 plus hours of live trading videos, courses, an educational library, ebooks, and dedicated support. Stop guessing. Start trading with confidence. Become a SPY striker today, and take your trading to the next level. Tired of wasting hours staring at charts, over-analyzing trades, and still ending the day with inconsistent results? You're not alone. That's exactly why the SPY Strikers Trading Mentorship Discord community was created. Here, you can trade just one ticker for 1 hour and make strides towards consistent results. Join the SPY Strikers community and get daily live trading, clear pre-market game plans with key levels and high probability buy and sell zones, over 4 hours of delay-free, ad-free live trading and training, plus high win rate trade alerts, automated technicals that simplify charts, and full access to my strategies and indicators. This isn't a signal service. It's a